in that discussion. How much is this executive order going to have an impact on job security for American people?
I don't know that it does yet. I think where you'll see a lot of it is in terms of figuring out where within the government you can automate tasks, using that as a pilot. But this administration is very focused on making sure that we're balancing those equities and that we're not pushing people out of jobs, or if there are jobs that are being phased out because of technological advancements, how do we account for that? I don't see this going away as a major labor issue anytime soon. I also see it emerging as a huge issue in education and healthcare. And we've been very focused, I think, on the consumer applications for this and the defense
Caitlin,
applications.
I wish we had more time with you. Caitlin Legacki from Four Corners. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Apple is set to capitalize on a computer market resurgence when the company unveils 2 new Macs and processors later today. Apple will be holding an online event at 5 p.m. California time dubbed Scary Fast, where it's poised to announce a new iMac and updates to its high-end MacBook Pro. Apple is also slated to unveil the next generation of its computer chip, the M3. Apple shares ahead of the announcement, up now by just about 1.3%. McDonald's sales and profits beat expectations in the third quarter thanks to higher prices. The burger chain said comparable sales, which track restaurants open at least 13 months, rose 8.8% in the period. Broadcom and software maker VMware say their $61 billion merger is on track to close before a November deadline. And with more, here's Kimberly Adams.
Charlie, the companies did not say in a joint statement how close they might be to an approval from Chinese regulators, the last major hurdle in completing the deal. But they say there's no legal impediment to closing under U.S. merger regulations. The agreement between Broadcom and VMware expires on November 26, though they had maintained until last month that they expected to close by today. The combination of the U.S. chip maker and cloud software company, one of the biggest technology mergers ever, could become the latest casualty of an escalating fight between the U.S. and China for tech dominance. Charlie?
And that's Kimberly Adams reporting. We've got shares of VMware up 1%. Broadcom unchanged. Those are our top company stories. This is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Live from Washington, where we bring you up to date on world and national news. Let's bring in Nancy Lyons now from the Bloomberg 99.1 newsroom. Hi, Nancy.
Hi, Joe. Israel Prime Minister Benjamin Netanyahu says Israeli ground operations are expanding inside Gaza. Don't expect a truce anytime soon.
Calls for a ceasefire are calls for Israel to surrender to Hamas, to surrender to terrorism, to surrender to barbarism. That will not happen.
Netanyahu says other civilized countries, including the U.S., would never agree to a ceasefire after 9/11, so neither will they. He also refused to resign over criticism over security failures in detecting the Hamas attacks. Aid shipments into Gaza, by the way, are picking up, with the U.S. saying 150 trucks arrived yesterday, with more expected to move in today. House Speaker Mike Johnson is expecting an Israeli aid bill to pass the Republican-led chamber this week, but that's in direct contrast to President Biden's broader request for aid, including support for Ukraine. Bloomberg's Anne-Marie Hordern says the speaker could face some pushback on his plan.
He is trying to separate Israeli aid alongside what the White House wanted was aid for Ukraine, Taiwan, and other national security interests around the globe, but also with Senate Minority Leader Mitch McConnell, who also wanted to see a bigger package. So there's no doubt in my mind that Congress is going to be able to pass aid to Israel in a bipartisan fashion, but potentially this becomes a problem because he is trying to really decouple it from that broader package.
Bloomberg's Anne-Marie Hordern. Speaker Johnson also faces the challenge of funding the government before November 17th deadline. Matthew Perry fans are leaving floral tributes outside the Friends apartment in New York City. This following the actor's death over the weekend. Officials confirm an autopsy was completed on Sunday, but no word yet on the cause of death. Perry was found dead in his hot tub at his Los Angeles home on Saturday. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Joe and Kaylee.
Hey, Nancy, thank you. President Biden speaking right now in the East Room, Kaylee, about the AI executive order we were just talking about with Caitlin a little while ago. It's not artificial intelligence he started speaking about, though. It's the UAW.
Yes, this is the most pro-union president in history, as he calls
That's
himself,
right.
Joe. So
And he's
taking
got
a
a
little
room
opportunity for a victory lap on the union win here.
Yeah, I guess that's right. Speaking to the deals with all three of the big three, GM, as we were discussing earlier, the last to fall into place after Ford and Stellantis. Here's the president.
These agreements ensure the iconic big three can still lead the world in quality and innovation. Due to the commitment and solidarity of the UAW workers, willing to exercise their right to collectively bargain. They won a record contract with over a 30% increase in wages, greater retirement security, and more paid leave. And the commitment by the big three to create more full-time middle-class jobs and invest tens of billions more dollars in plants and factories building automobiles' future here in America.
Big round of applause in the room, which, by the way, went on for a lot longer than that. This is, as he says, not by accident. This is Bidenomics, and organized labor is part of that.
Well, and it really just speaks to the economic moment we're in, Joe, and we were having a conversation with that on that earlier in the program, this idea that we're coming out of a pandemic where there was just not a lot of supply of labor for a really long time. And right now, workers have leverage that they haven't always had and are able to extract things from companies that they may not have been able to a handful of years ago. And a 25% wage increase from the big three automakers maybe is just one example.
Well, that's right. You know, we talked about Las Vegas as another. Yeah. Imagine the Strip was shut down. You want to talk about the pandemic. People couldn't have imagined at that point being in the position we are now. And I'm still wondering when actors end up cutting a deal in Hollywood.
That's true. Those talks are ongoing.
Great conversation, as always, with Kaylee Lyons. I'm Joe Matthew. We'll meet you back here a little bit later on. Balance of Power on Bloomberg TV and back here on Sound On the radio, the YouTube, and the satellite tomorrow. That means Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everyone. It is Monday, October 30th. Also known as Cabbage Night or Mischief Night.
Mischief Night sounds like one that is real. I don't think you made up Cabbage Night.
I got such a hard time in the newsroom. And there's a lot going on, a lot of mischief in the world, and some of it much more troublesome than others. Having said that, we just got a headline crossing. U.S. Treasury maintaining its estimate of a $750 billion cash balance for the end of December and sees $816 billion net borrowing for January to the March quarter. We're basically getting an update on what the Treasury needs to fund everything.
I'm keeping an eye on the equity market right now, Carol. Dow up 1.7%, the S&P up 1.2%, the NASDAQ up 1.2% as well. That rebound from the technically oversold levels, remember that 10% correction in the S&P, we talked about it from its July high. That was on Friday. Today, different story, and we got a week that is just full.
Oh my God, it's like jam-packed. So coming up, we're going to get an update on the war between Israel and Hamas, and the one nation that has spent more than a decade trying to position itself as the Middle East's indispensable go-between, and how the time has basically come for that nation to step it up.
And of course, the Fed is top of mind this week. There's another FOMC meeting and decision. The big bond market, though, event is at Treasury, not the Fed. We're going to explain all about that a little bit later.
Yeah, we are. All things Apple, too, getting set to capitalize on computer sales with new Macs. They're making some news or announcements today. That's the upbeat stuff. The flip side, China, wah, 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 when it comes to iPhones.
Yeah, Mark Gurman is going to be joining us a little bit later to talk all about that. Also, Enterprise Holding, wait, it's now called Enterprise Mobility. We're talking about the car rental company. The company CEO, Chrissy Taylor, is going to stop by the Interactive Broker Studio to talk all about the rental car market and what she's seeing when it comes to travel and the outlook.
I'm looking forward to that. And also Malaika Jabali, she's the author of the new book, It's Not You, It's Capitalism, Why It's Time to Break Up and How to Move On. She's also senior news and politics editor at Essence Magazine. She has an interesting thought about maybe what we need more of in this society.
I'll give you a hint. She's a lifelong socialist. How's that for a hint?
Super big hint. And also we're going to talk about candy costs surging and an analyst souring on Krispy Kreme. Blah, 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 blah.
Did you buy your Halloween candy yet?
Nope.
$32 with one bag
ka-ching, ka-ching.
of chocolate yesterday.
Yeah, it's because sugar and cocoa cost a lot.
Yeah.
We're going to talk about that in just a moment. We're also going to talk about the markets. I mentioned the Treasury coming out. Their quarterly borrowing, they're cutting it to $776 billion from $852 billion previously. All right, right now, it's markets and countdown to the close.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Scarlett Fu and Katie Greifeld here with you, joined now by our colleagues Carol Masser and Tim Stenivek, allowing us to welcome in full everyone across television, radio, YouTube, and originals. And we did get some headlines, Carol, just now about the U.S. cutting its quarterly borrowing estimates to $776 billion. We don't have to borrow as much as we thought we needed to.
God, all right, let's go out and spend some money then, I guess. No, it's interesting, right? It's basically a health check on the U.S. government and their spending. So it is interesting to hear that because, right, there was a little concern about maybe less revenues coming in recently. So that's an interesting number and something that we think about with the backdrop of a week that we are so much focused on the Fed. And I'm curious about Jay Powell, whether on Wednesday he'll make some comments about our fiscal situation with another deadline ticking.
I think he steers far away from that. He's like, that's Treasury. That's
He's going to be asked about it, though. You can pretty much bank on that.
Yeah, right? Because he's like got to look at this whole picture and wonder about, in terms of raising rates. And we think about what it costs for the government, basically, to service that debt. Having said that, all right, serious stuff aside, no more Treasury stuff.
Hey, this is serious.
Let's talk about the sweet stuff, if you will, because we did have Truist Securities coming out. They got a call on Krispy Kreme. Our Doug Krisner in the newsroom said we're going to call it sour cream because Truist basically downgrading it to hold from a buy rating. They cut the price target to $13 from $20. And this is, I feel like, a familiar refrain that we're hearing. They cited the uncertain impact of drugs known as those GLP-1s on packaged food snacks, Tim.
I think the uncertainty here is key. And the analysts come out and said, it's too early, Scarlett, to understand what the impact is actually going to be. But there is some concern that, if people are taking these GLP-1s on a widespread basis, then they will not eat as many donuts, I suppose. But I'm just going to take a step back and say, wait a second. We don't know how many people are going to be taking these. Yeah. We don't know how insurance is going to cover them. We don't know what they're going to do to consumer companies like Krispy Kreme. Seems like the market's kind of like overreacting. I want to say overreacting. I'm not.
But you said it.
I did. I know. I stopped myself though.
It's the uncertainty that no one knows about. I mean, maybe the weight loss drugs.
There's a lot of things that are uncertain.
Absolutely.
In this world.
Maybe the weight loss drugs will mean that if I want the donut, I'm going to have it, and then if I need to, I'll take the weight loss drugs afterwards.
And when it comes to the stock market, just sell now. Ask questions later. I want to talk about candy. This is tangentially related, but we talk about some of the risks for these food companies. You aren't necessarily seeing reflected in the prices of candy right now. This is very much a story that's hitting as we talk about Halloween tomorrow. Consumers facing steep prices for candy this year because candy costs are surging. When you look at the price of cocoa, you look at the price of sugar. Of course, we've had a lot of weather events globally that is impacting crop prices. So looking at some steep costs for tomorrow night.
The big number here that really gets your attention, Americans expected to spend $3.6 billion on candy this year for Halloween, up from $3.1 billion. We are spending $500 million more this year than last year. Yes, because of higher prices, but that's a lot of candy.
Yeah, I actually went yesterday to the local store in my neighborhood to buy Halloween candy, and I was shocked to see how expensive it was. $32 for a bag of Snickers and Kit Kats, and there's only 150 pieces in there.
Wow, that's
so
a nice man on the street.
We're gonna run out. The Stenevec house a little bit.
You're gonna have to ration. You're gonna
I
have
think
to
we'll probably do is
on their costumes.
Take our toddler's candy, dump it in the bag.
All the Mounds and Almond Joy will be redistributed again.
Exactly.
Who understands?
Scarlett knows what I'm talking about.
It's time to put out a bowl of apples again.
We're not going to be them.
All right. You're not going to be known as that family.
Or raisins. Remember that? That's from our childhood.
Also.
Boxes of raisins.
Not interested. All right, guys. We're going to be back in less than an hour's time. Our cross-platform radio, TV, YouTube, and, of course, Bloomberg Originals. We do have some earnings coming after 4 Pinterest, so we'll be breaking them down as well. Join us at 4 p.m. Wall Street time.
But you're waiting for Wednesday.
All right, everybody, as we mentioned, it is about Halloween and higher candy costs, but it's also a very eventful week for financial markets here in the U.S. We've been talking about it. More earnings, got a big one from Apple. We've got a monthly jobs report on Friday. And, of course, we have a really, really big one, Tim, and that is the FOMC meeting on Wednesday.
Yet.
As
Bloomberg News chief correspondent for global macro markets, Liz McCormick, writes in a most-read story on the Bloomberg today, the Fed's policy statement is setting up to be the number 2 event on Wednesday. Investor focus, Carol, instead is likely to be on the Treasury Department's new borrowing plan that's due hours ahead of the interest rate decision.
Right, we just already got a glimpse of a little bit of that. Liz, of course, joining us here in our Bloomberg Interactive Brokers studio. So glad you're here in studio. We just got a headline, and it looks like the U.S. Treasury actually doesn't need as much money. Good thing, it still seems like a lot of money, but go ahead.
Many hundreds of billions
Yes.
still. And by the way, it's cool to have Treasury Department sexy again, right? It's not all the
Don't
Fed.
go that far.
I don't want to go that far. But yeah, so, to explain, because sometimes it gets confusing. Today they give out like the estimates in aggregate for the whole quarter, right?
Okay.
Not like, hey, we're going to sell this much at 10-year notes and this much at 30 years. But you're right, they did shave it down a little bit, 76 billion, relative to they had a first estimate a few months ago. They said Treasury officials kind of gave us some guidance that part of this is related to, the natural disasters in California, and some of those other states delayed some of the tax receipts that came in. So that's part of why they end up having like a little bit higher revenues that made them lower this down a little. On net, there's still a lot of borrowing to come. They even said this for that quarter in any year is a record. Last quarter, we had a record over $1 trillion for that quarter. So still all eyes will be on Wednesday when we get what we call the refunding, where the Treasury will say, hey, next week we're going to sell X billion of all these different securities to fund the deficit and other things over the quarter. And so that's kind of more the granular, what people who trade bonds want to know. They're going to lean heavier to the long end or the short end and that kind of thing.
So why is that so much more important than what we hear from Jay Powell?
Well, so I tried to put in the story. I think it's kind of there that Jay also and co kind of set up this meeting as like Subhadra Rajapapa at SocGen said, kind of a placeholder. Kind of gave us a lot of signals that they're going to maybe take a pause, take a beat. And they said the rise in yields have done part of their work. So, the bond market is really, like swaps traders, really priced out the odds of any hike. So, and we don't have the dot plot this time. It's not one of those dot plot meetings, right?
You almost feel like Jay in the press release, like, guys, got nothing. We'll see in a month or two, right?
Pay attention to the Treasury, not me.
Yeah, can I just skip it? But explain though why it's so important, Liz, to understand what's in that refunding and the details. And we keep talking about, right, the longer end. There hasn't been so much interest, right, in auctions because investors, in terms of higher yields. Explain it for me.
Yeah, so
because you're smarter than me on
there's
this.
a lot of reasons, but they've had to. Let's say the U.S. Treasury sells a lot of paper. They always sell it, no problem. But they might have to pay up, right? So yields have been going up more so on the long end. A mix of things. First of all, the Fed higher for longer has settled in. That kind of bring rates across the curve higher. Some people feeling like we're going to have a stickier inflation, like maybe not get to 2, but stay around 3. So that higher, let's go wonky. R* Fed's long run rate may have to be higher too. And then let's get to the Treasury stuff. A lot of supply, deficits, Fed's not in the buying game anymore.
Right.
So that's a lot of supply. Some of the buyers that used to kind of suck this up easily are not there as much.
Yeah, I wanted to talk about that a little bit. Who are the buyers who are not showing up? And is there any indication they're not going to be showing up on Wednesday?
Yeah, so let's just say, because someone will yell at me if I don't, people are always kind of somewhat involved. The dealers have to participate in auctions, but let's look at commercial banks who we know are not buying treasuries. They're having a lot of trouble with they're selling treasuries because all the issues on their balance sheet with some of the other banks. Foreign central banks haven't been as active for a long time. They don't need it. The hedging costs are higher. Plus, we got the BOJ Tuesday, right? There's been this ongoing speculation that maybe let's just forget what happens Tuesday at the BOJ meeting, but that rates abroad may be getting more attractive. If the Bank of Japan finally lets go yield curve control, Treasury's not the only game in town, right?
Tim and I caught up with Kathy Jones of Schwab last week. Great conversation. People have tweeted on it and said, and I wrote the notes down, she said she's tried for years and for decades actually, to find a relationship between Treasury supply and interest rates. And she goes, I'm not able to find any kind of solid correlation. Is that why we care about this refunding? Is it the amount? Is it the composition? What's the takeaway for our audience?
Yeah, so, like, I don't know if everyone can see, but I brought my paper. This is like the last refunding. They give you a little
Treasuries
table.
are tough.
Treasury, me and my folks, we do it to write this report. So they say each maturity, this is what we're going to sell. The auction's going to go up at $2 billion, $1 billion. So all the traders who trade across the curve, so if Treasury, like last time, they increased 10-year notes by $3 billion for the new issue.
Right.
Say they go 1. Oh, maybe Treasury 10 years look a little better than 5 years. So that's why the real traders are looking, where do they put it? Because what's known, sadly, is that they're going to increase. We have a deficit that's very large.
Yeah.
Like we said, the Fed's doing QT. That's known they have to increase. Just where they do it, or do they sell more Treasury bills, which Alex Harris has a great story out today on bills, so many bills, so.
We're going to come to you for a post once we get the news. Liz McCormick, thank you so much. It's complicated, treasuries, and she always makes it so simple. Chief correspondent for Global Macro Markets, of course, here in our studio. Also in our studio, studio is Bloomberg News personal finance reporter Claire Ballantyne, also recently involved in assessing another measure of wealth, specifically Taylor Swift's, which we loved. But speaking of the Fed, another one of our most read stories, just like Liz's, is about the Fed's fight against inflation and what it is doing, Tim, to middle-class Americans.
Yeah, Claire Ballantyne joins us now. Claire, good to have you with us. This is part of a series that the Harris Poll did with Bloomberg News, and I was struck by this story because it got some exclusive data about the way that inflation is hitting the middle class. Talk to us about the findings.
Yeah, so it's been really great to have this survey because we've been doing it for a year now, and we've periodically, every few months, ask the same questions until we can compare how things have changed. And so in this most recent one, we found that 44% of middle-class Americans said they were stressed about the economy, which is up from 40% a year ago and 39% in March. And that might not seem like a ton, but it really is ticking up, and it's a significant portion of regular Americans that are concerned about what's going on.
Go ahead. Well, what's interesting? Go ahead, Carol.
No, it's a trend line I feel like we keep hearing from people. I had a conversation with a prominent CEO this morning, and just like, what the heck is going on? That it just feels like, higher costs are very, very sticky.
But some of this is about perception, Claire, more so than the actual numbers. Because if you look at the numbers, inflation is increasing at a rate that's lower today than it was a year ago. So I'm wondering, kind of how we explain that.
Yeah, so I would say that is a great point. What the data shows is that inflation is slowing down. For the average person, though, the perception, they aren't looking at the CPI numbers month after month like we are. What they see is that, they go to the grocery store and things are more expensive. And a big part of that also is that their wages aren't keeping up with that. And so, even though the problem is getting better thanks to the Federal Reserve's rate hikes, most regular households are worried about that. And on top of that, they're feeling the impact of higher borrowing costs. I talked to people that were wanting to buy new cars, or, they had more money on credit cards, and the rates are just going up is hurting them.
Okay, I feel like, though, this is so indicative of our environment. While stress was easily the most, I guess, that a lot of people were feeling, right? Their emotions, they were stressed. Because of paying more, and they still feel like inflation is impacting them. There was also a jump from a year ago in the share that said that they were optimistic. So, help me. I don't understand that.
It's really complicated, and I think what you all are getting at is that these are people's feelings and their perceptions. Some of this breaks down across party lines, where Republicans feel less confident about the economy. Democrats are feeling more confident about it. So it really is an issue of perception. I think sort of the takeaway is that, all these people are hanging in there. Are any of these people happy about the economy or think things are going to improve? No. And that has big implications for how they spend.
Right.
And
absolutely
what they do.
Huge political implications, too. I mean, we've talked about other polling that Bloomberg has done that talks about how, former President Trump is leading President Biden on economic issues in 7 key battleground states. It's about how people feel about the economy.
I love this one quote. The good news is this is one individual. It says the good news is he got promoted. The bad news is he got relocated with a higher mortgage rate, right? So it's like people are working, or if they move for a job, but it's a place where they have to buy a new home, that costs them a lot of money.
It's a double-edged sword. It's like no matter what they do, they're either getting hit with inflation costs or with borrowing costs right now.
Liz, it's just, if we get the quarterly refunding, it's all going to be fixed, right?
Exactly. Yeah.
That's a no.
I just want to fix my deck in the HELOC. It's too expensive.
Yeah, not going to happen for a while.
That is so true. That is so true. It's really preventing people from spending. See? This is it. Sentiment or reality. Claire Ballantyne, thank you so much. Personal finance reporter at Bloomberg News in our studio, of course, with Liz McCormick, as we said, Bloomberg News chief correspondent for global macro markets. 2 of the most read stories on the Bloomberg. Check it out on the terminal and at Bloomberg.com. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. BlackBerry shares are spiking, and this update is brought to you by Glenn Mead. Glenn Mead offers sophisticated wealth and investment management solutions combined with the personalized service you deserve. Your wealth, your mission, your investments. Let's talk. Visit glennmead.com to learn more. The Globe and Mail of Toronto says John Chen is departing as CEO of BlackBerry this Friday, citing a source. The company is expected to announce an interim or full-time replacement when it discloses news, perhaps as early as today. Shares of BlackBerry, ticker BB, they're up now by just about 4.4%. The Dow, the S&P, and NASDAQ are all advancing. In fact, we are trading at just about the best level of the day right now, with the S&P now higher by 57 points, up by 1.4%. The Dow up 578 points. That is a gain now of 1.8%. The NASDAQ Composite Index up 170, a gain of 1.3%. 10-year yield right now 4.86%, with a two-year that's yielding 5.03%. Spot gold down $8.50 the ounce to $19.97, down 0.4%. And West Texas Intermediate crude trading lower by 3.5%, $82.58 a barrel. Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets, and this morning on Surveillance, she told us you cannot ignore small cap shares along with the Russell 2000.
I always tell people about small caps. Even if you can't buy them, they tell you a lot about what's going on in the broader market. And I think what's going on is that they're really taking the brunt of the pain as regards to the big increase in 10-year yields that we've seen. Now, of course, the tech stocks and the big cap part of the market are getting knocked around by that as well.
And so far this year, the Russell 2000 is down by about 6.2%. Tory Burch might just be ready for a change. The fashion brand is said to be working with Morgan Stanley to explore its strategic options. That, according to WWD. Apple set to capitalize on a computer market resurgence when the company unveils two new Macs and processors later on today. Apple up by 1.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week. Carol Massar along with Tim Stenovic. Some headlines just crossing a moment ago from an Israeli military spokesman saying there is no fuel problem in Gaza and that they are not allowing fuel delivery to Gaza. So
there's no fuel problem, but they're not allowing.
Yes, so I guess I'm a little confused. But again, these are sometimes the headlines come out and starts and stops. So we'll try and give you a little bit more color on that. Having said that, we know the Israel-Hamas war is now in its fourth week. Israel sent more forces into Gaza. Concern, of course, over the humanitarian situation in the Strip. And also troops also raided a West Bank city and conducted an airstrike in Syria, Tim.
Yeah, also Israeli Prime Minister Benjamin Netanyahu this evening, Israel time, making televised comments. That was about 2 hours ago, saying Israel will not agree to any ceasefire with Hamas.
All right, so let's get to it with Bloomberg News Israel Bureau Chief Ethan Bronner. He's on Zoom from Tel Aviv, Israel. Ethan, thank you so much. I know it's later there. How are you, and what are you hearing about the latest on what is going on the ground in Israel, in Gaza?
Hi there. I'm fine, thank you. I understand your confusion about the fuel question and about everything else. These are very, this is the fog of war. It's difficult to tell what's exactly going on. The Israeli claim about the fuel is that Hamas has plenty of fuel and is using it for its military purposes and not allowing it to go to civilian needs, and therefore it doesn't want to allow any more in. I can't tell you whether that's true or not true. I can just say that's their view. At the same time, the Israelis have gone in on the ground, as you know, since Friday night. And tonight they announced that they had rescued overnight a female soldier of theirs in the outskirts of Gaza City. So they say they're making progress in fighting Hamas fighters on the ground and in killing them. And they also say that civilians are encouraged to go to the south near Khan Yunis, and that if they do, they will be fine, and that more humanitarian aid will get in the coming days. The UN and many NGOs and charities in Gaza speak of a very dire near collapse of humanitarian issues. There are at least 8,000 dead people, many of them certainly civilians. So it's a very complicated and very dire situation.
What is the tone on the streets in Tel Aviv, Ethan, in terms of the calls by the international community for a ceasefire and the focus that there has been on so many civilian casualties in Gaza? What are people in Tel Aviv saying about this?
I would say that the overwhelming majority of Israelis do not believe that there should be a ceasefire, do not take too seriously the international calls. They believe that what happened to them on the 7th of October is a sign that Hamas is a deeply evil organization that wants to kill its people and to abuse them, and it can't live with them on its border, and it has to go take care of it the way, the analogy they give, is where the United States and others took care of ISIS and Al-Qaeda, and indeed the way the Allies took care of the Nazis. So that's how they view it. I'm not saying there's nobody in this country who agrees with those international calls, but they are not a very large group.
Well, Ethan, do most Israelis back Prime Minister Benjamin Netanyahu at this point? It was a divided nation prior to that. Where are they now?
There is a great deal of disillusionment with Netanyahu, but not with the policy of the war. They're angry at him for having allowed the security breach to occur that led to all these killings on the 7th of October. They are angry at him for staying in office after he was indicted and for bringing into office with him some very, very extremist people and so forth. But as you know, Benny Gantz, an opposition leader, joined the government, and there is a general sense of unity in this country about the need to proceed with this war.
So this war, and I think the concern is certainly by many there and also elsewhere around the world. There's Saudi Arabia had deadly clashes with Yemen's Iran-backed Houthi rebels. We're looking at stories about Syria, different borders. Is the expectation is that this expands into something much bigger?
That is the fear, of course, here and everywhere. The attitude in Israel, at least at the moment, is that they can't live with this kind of threat, and if it does expand, they can handle the north, but they also basically believe that the way they've handled Gaza so far has not brought Hezbollah in except for small exchanges from the north, and if they're smart, they can keep it at that level, and of course. They believe and are grateful for the fact that the United States, two carrier fleets in the Mediterranean, are sending a message to Hezbollah and Iran as well. So there's a feeling that if they just sit still and don't take on Hamas in this way, that that other Iranian-backed groups will challenge them, and they believe this is the way to push them back.
Understood. I think of how the United States felt after 9/11 in terms of any kind of terrorism. I want to ask you about a story, and I think what's great about Bloomberg is we look at things, all the different kind of moving parts, moving pieces. There's a nation that has spent more than a decade trying to position itself as the Middle East's indispensable go-between, criticized by its neighbors for housing Hamas leaders while maintaining channels to Israel. I'm reading from the story. The time has come to step up, and we're talking about Qatar.
Qatar, yes.
So what do we need to know? And I'm thinking about our audience who's trying to understand all of this and the different, nations, if you will, or entities that might play a role in the outcome here. What do we need to know about this story?
Qatar is an extremely interesting, small, wealthy oil emirate that has found a way of being both an ally of the West and also of Islamist organizations and countries, and has been very close to Hamas over the years. It hosts a number of its political leaders, and it has given about $1 billion in the last 10 years to Gaza, so that for improved infrastructure and so on, with Israel's approval. What Israel feels as a result of what happened on October 7th is that it allowed itself to be fooled by both Hamas and Qatar, that Qatar was in effect allowing Hamas to arm itself because it didn't have to spend its own money on infrastructure and salaries, and instead spent its money on building up this very, very militant army that broke through the barrier on the 7th of October. So I think that Qatar is being asked to explain itself. I think that they are trying to find a way to help release some of these 230 or all of these 230 hostages. They are the only ones who can act as a go-between with Hamas, but it has to be said that they have not succeeded. Yet.
Yeah, no, exactly. So much to this story, and it feels like so much tragedy. And it's just very, very difficult. Ethan, thank you so much. Like we said, we know it's later there. We know you're doing a lot of stuff there. Just stay safe, and we really appreciate and are just blown away by your reporting efforts on all of this. And thank you. Stay safe. Bloomberg News Israel Bureau Chief Ethan Bronner joining us on Zoom from Tel Aviv, Israel, where it is later in the evening.
It certainly is. Hey, Carol, let's go from Tel Aviv to Washington, D.C. now for a check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom there. Hey, Nance.
Thanks, Tim. President Biden says he has spoken with the president of the United Auto Workers about the end of the strike against the big three automakers. GM today became the last of them to strike a tentative deal. Biden says it's good economic news.
These agreements ensure the iconic big three can still lead the world in quality and innovation.
President Biden spoke during an event in which he outlined new steps that his administration is taking to better regulate artificial intelligence. He has signed an executive order that will establish new standards for AI safety and security. All leading companies in the AI space will need to share safety results and other pertinent information with the government moving forward. Israeli forces continue their ground offensive in Gaza following the unprecedented attack by Hamas earlier this month. Prime Minister Benjamin Netanyahu says this new phase of the conflict represents a critical moment, not just for Israel, but for the civilized world.
This is a turning point for leaders and nations. It is time for all of us to decide if we are willing to fight for a future of hope and promise, or surrender to tyranny and terror. Now, rest assured, Israel will fight.
Netanyahu says Israel did not start this war or want this war, but vows Israel will win it. Humanitarian aid is flowing into Gaza with 150 trucks moving in yesterday, more arriving today. The State Department's Matt Miller says they're also pressing Israel to restore access to water and communications in the region.
Water is a fundamental human right, and its availability is crucial for the well-being of Gaza's residents. Communications networks needed to be restored, and we are pleased that they took steps to do that.
Miller says officials are also working to try to get Americans out of Gaza. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long at Bloomberg with the Dow, the S&P, and NASDAQ all advancing 20 minutes to go ahead of the closing. Well, we're holding close to session highs. Let's head right over to the first word breaking news test for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks with a late day bid with the Dow currently up 557 points. S&Ps are higher by 54 and NASDAQ climbs by 163. The U.S. 10-year yield at 4.88%. Gold is down 8, oil slumping, and Bitcoin is down by 0.4%. Among the main 11 S&P sectors, all were trading in the green, led by gains in telecom, financials, and consumer staples. Leaders to the upside in the Dow, Goldman Sachs, Nike, and Verizon, while Merck and Cisco were little changed. After earnings, McDonald's beat estimates, while ON Semi plunged 20% after its numbers. And in other news, Western Digital plans to separate into two publicly traded companies. Wrapping things up, some of the names reporting after the bell tonight include Arista Networks, Pinterest, and Tenet Healthcare. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg, type squawk, SQUA on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just under 18 minutes left in today's trading session. Carol Masser along with Tim Stenovic live in our Bloomberg Interactive Broker studio on YouTube and, of course, on Bloomberg Originals. And as you heard from Charlie and Bill, stocks just rolling over their best levels of the session. But you're talking about 1.25% higher on both the S&P and the NASDAQ. This is after the S&P technically had a correction, 10% off of those July highs. We saw that on Friday, but very different tone today, and the Dow's up 1.7%.
And what are yields doing, Carol?
And what are yields? Aren't they backing off a little
They're
bit?
higher.
They're higher.
Yeah, so I don't get it.
Yeah, but they're off their highs of the session, too.
Yeah, but the 10 years, still at 4.88.
Right, but it was at 4.9 or almost 4.9 earlier today.
Okay.
Yeah, I'm just saying.
Okay,
Perspective
that's fair.
when you, what is it?
When in doubt, zoom out. Hey, I'm really curious what Max Wasserman has to say about all this. Founder and senior portfolio manager at the independent investment firm based in Illinois, Miramar Capital. Max on Zoom from Northbrook, Illinois. Max, good to have you with us. Where are we in the cycle right now? I'm having a hard time understanding it.
Well, thank you for having me on. I think today is more of a relief rally because the market sold off a little bit, and you're seeing some people guess about what the Fed's going to do and if they stay pat. And you're also thinking that the excursion in the Middle East is not flaring up as dramatically as people thought it might have over the weekend. So I think today is just a reaction to the fact that you have not as much instability, which is why oil is down, while interest rates are back up. And I think people are wondering what the Fed's going to do, but they're not anticipating a rate hike at this point.
Yeah, I was going to say, what are people wondering then if there's not going to be? We know that nobody's wondering if there's going to be a rate hike at the next meeting. What are they wondering about December?
I think it's more of just like, can they get inflation under control and can we be past the tightening cycle? Because as soon as you're past the tightening cycle, people are going to start looking for a rate cut. I think they're going to be a little bit overly optimistic on that. And we're going to have to see what the inflation numbers look like and what the Fed's appetite is.
Yeah, it's kind of interesting, and I think we all have to be like, whoa, slow your roll here in terms of cutting rates, right? Like we've been fooled before on market expectations of a rate cut, only to see that it's kind of being pushed out further and further. Having said that, Max, one thing I really wanted to get into is you have some specific names that are on your radar. Chevron among them. It's down about 19% year to date. We know big news just as of late. Buying Hess, it's a $53 billion deal. You like it now more than before it bought Hess?
Well, I like it long term. Again, we're a dividend growth shop, so we like the financials. Also, it's a leverage to energy prices. So the deal with Hess will give them better production and give them a little bit more diversification outside the Permian. So yes, I do like it at the pullback. You know, they have plenty of cash, and it was a messy quarter of earnings. There were some issues with cost in Kazakhstan there, but this is a great company. Financials are strong. They're a little bit more leveraged to oil. So a slowdown in the economy will keep oil prices down. On the other hand, if you have a tick up in problems in the Middle East, better production growth for them. I think Chevron long term, you know, go back right back to 180, 190, and at a 4.1% dividend, trade at 10 times earnings. I think it's a great place to be.
But you really like the dividend.
I like the dividend. I like the fact that they have a tremendous balance sheet.
Okay.
You know, they've really, you know, they have less debt than like 15% on the books. Tremendous cash production, great operators. So if you look at it long term, we like the energy sector, and this would be the one of the ones we have.
Okay, let's go from energy to snacks. PepsiCo, the Ozempic
That's a
threat.
rough segue.
I mean, maybe Pepsi can give you energy, Mountain Dew. I don't know. There's some stuff I could do there, Carol.
Yeah.
We've been talking a lot about this, especially today when you saw Truist get concerned about Krispy Kreme donuts over the Ozempic threat. Are investors, analysts, are they putting too much stock in Ozempic and what's going to happen?
I believe they are. I mean, if you think about it, even if the maximum amount of people are using it, which they say is maybe 5% of the population, you got to think about it, it's still like $900 a month to get Ozempic. It's a very expensive drug, and it doesn't stop you from eating, it just reduces the amount. Now, Pepsi, the one where we have a large investment is, we look at it as like 22% of the global snack business, which is over $200 billion, has 40% of North American beverages. Everybody's thinking nobody's going to eat anymore. Nobody's going to snack as much. And we think it's definitely a hype, if you will, that this drug is going to stop people from snacking and drinking. It may moderate for a small percentage of the population that can afford this drug, by the way. It's a very expensive drug. And again, even if the height of it, you're maybe looking at affecting 5% of the U.S. population at this point. So we think it's an overreaction by far.
I will say not expensive if insurance ends up covering it.
At some point, correct. But even if you give it, it still, it does is it reduces your appetite, shrinks your stomach, if you will. But it doesn't mean you don't eat anymore. And it seems like they've punished all these stocks to the point where the people think you're never going to snack again.
I've seen it at work. It cuts people's appetite. Now, you've got to keep taking it, you know, but I also think about for the people who have diabetes, and it's a big part of our population. So I'm just thinking, you know, we did a story on Madison Muller about how there are lots of other you know, ailments, if you will, liver, kidneys, heart, that they're now looking that these GLP-1 drugs might be able to be effective in. Alzheimer's, substance abuse. If indeed it becomes this wonder drug that expands out a lot, then what?
Well, I think what you're going to see is, I think most of the markets reflect that. If you look in the medical device segment of the market, you know, companies that we have investment like Medtronic, Abbott Labs have been hurt because people think they're going to have less procedures because of Ozempic. You're not going to have the heart number of procedures you're going to need. You're not going to have knee replacements because you're not going to have that problem. Your diabetes is going to go down. You know, again, this is not a pill you take and everything goes away. So yes, it's going to have
not yet.
But normally when you see the hype, and I say the word hype because people are discounting these stocks to tremendously cheap levels, to the point where they feel like they're not going to do it anymore. I just think it's an unreasonable expectation. Now, it doesn't mean it's not going to be transformative, but again, you know, it's to the point where, is it going to stop people from having heart procedures? It may limit the numbers. Is it going to have people who's not going to have diabetes? Again, what kind of diabetes? Are you not going to have stents? Are you not going to have, you know, again, so are you not going to eat? Are you going to snack? It's to the point where these companies are trading near their 52-week lows. And even though their cash flows, a lot of these companies are very strong, people are just saying basically, sell the rumor, if you will. So I think people are getting a little bit ahead of themselves. When you have great companies like a Pepsi that we have an investment in, paying you 3%, it's growing, it has organic growth, and it has ability to grow internationally in the snack division. So if you look at it from that perspective, I think there's plenty of opportunity, especially when the stock is trading a 52-week low. And in this market, you have a rolling bear market basically going through every sector except for the top 10 large cap tech stocks.
Max, you're not the only person who thinks this way. I hear Paul Sweeney talk about it all the time.
I know. And I do like a bag of Fritos every once in a while. I'm just
Doritos, Fritos.
Healthcare could be disrupted potentially by all of this. Anyway, good stuff. Max Wasserman over at Miramar Capital. Thank you so much. Be well.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Apple is set to capitalize on a computer market resurgence when the company unveils 2 new Macs and processors today. The company will be holding an online event at 5 p.m. California time, dubbed Scary Fast, where it's poised to announce a new iMac and updates to its high-end MacBook Pro. Apple also is slated to unveil the next generation of its computer chip, the M3. Apple shares, they're higher now by just about 1.3%. Western Digital shares are up 7%. Western Digital will split into 2 separate publicly traded companies after talks to merge with Kioxia Holdings fell apart. And with more on that story, here's Bloomberg's Tom Busby.
But Charlie, the storage maker will spin off its flash business, which focuses on memory for computers, devices, and portable drives. Now, according to an investor presentation, Western Digital's remaining business will focus on selling high-capacity memory to cloud data centers. The announcement comes alongside the company's results for the fiscal first quarter. It reported net revenue of $2.75 billion. That's a 26% drop from the same period a year ago. Its flash business declined 9.6% to $1.56 billion, while its HDD unit declined 40.7% to just $1.2 billion. Charlie?
And that's Tom Busby reporting. Shares of Western Digital, right now they are trading higher by 7.3%. And those are some of our top company stories at this hour. I'm Charlie Pelletin. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, coming up on about 4.5 minutes left in today's trading session. We've got a rally underway here on this Monday. Very different tone from what we had last week. So kind of tracking the numbers here, but we're pretty much hovering just near our best levels of the session or just rolling off of them, if you will.
The question is it a relief rally like Max Wasserman said to us just now, sort of a sigh of relief that things in the Middle East didn't get worse over the weekend? We also do, Carol, have a lot of earnings coming this week that I could set the tone along with, Jay Powell.
Yeah, I mean, you've got the Fed meeting, you've got this Treasury refunding, you've got Apple on Thursday, and then you've got the jobs report on Friday, monthly report. So a lot of things that could maybe either kind of reinforce some of the narrative that's out there. Listen, it's cabbage night. It's mischief night.
What did you used to do on cabbage night?
That's when you used to like egg houses.
Well, that's what I was going to say.
Take flour, wrap things in toilet paper. I didn't do it, but my brothers.
I was talking, earlier.
I was a good girl.
When Scarlett said the thing about, the raisins, and you said the thing about the apples. Like, you give those out on Halloween. You get eggs thrown out the place.
You totally do. It's like not nice. Remember then there was the whole thing, it's really creepy, but like razor blades and apples, and apparently
that's not real.
I know that's an urban myth I hear. I know. All right, everybody, we're gonna head over to our TV colleagues in just a moment. Having said that, just want to mention real quickly, because it's going to come up maybe with an interview later on, the UAW, they've reached tentative agreements with all three of Detroit's biggest automakers, already planning to make the contract's expiration date, drumroll, April 30th, 2028, a call to arms for the entire organized labor movement.
Yeah, here's what UAW President Sean Baines said last night before he announced details of the union's deal with Ford. He said, quote, "This allows us to strike on May Day or International Workers' Day. It's more than just a day of commemoration. It's a call to action."
Yeah, kind of wild. Just saying, all right, everybody.
That's planning for the future, right?
Yeah, exactly. So we have definitely seen the upward movement, if you will, of organized labor, which for decades has just been on the decline in terms of membership, but definitely a different tone.
Yeah, New York Times tech workers, for example, going on a half-day strike this afternoon, accusing the media company of trying to unilaterally force them back to the office without negotiating in good faith.
Don't do Wordle, because if you do, apparently then you're...
A scab is the term that I heard.
Can you do connections?
No New York Times games if you want to show solidarity, I think.
Puzzle?
That's what the word is, Carol.
Don't go anywhere, folks. We're counting you down to the close. Beyond the Bell, our simulcast. It starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
We're about 2 minutes away from the end of the trading day on this Monday. Scarlett Fu and Katie Greifeld here, counting you down to the closing bell, and here to help us take you beyond the bell with a global simulcast, Carol Masser and Tim Stenovec. Welcome to all of our Bloomberg audiences across television, radio, and YouTube. Carol, there have been 17 weeks in which the S&P 500 has, or I should say in the past 17 weeks, there are 16 weeks in which the S&P 500 has closed higher on a Monday, and today's looking like it's going to be one of those.
Interesting, right?
Yeah, what does it mean?
Wait,
I don't know what
can
to
we do
with
this
that
on a
stat.
Monday? Can we do this
Wasn't
on a
last
Monday?
Wasn't last week the first one in 16, Scarlett?
Last week was the 1 week in which it didn't close up. I'm not sure what to make of this either, except that lately, since the Israel-Hamas war began, there was definitely reluctance to be long on a Friday, so maybe there's a little bit of a make-back on a Monday, but that doesn't account for 17 weeks,
There's
right?
a lot of stuff. Fed meeting, Apple earnings, jobs report, right?
That's true.
It's a
Big
lot of
week.
stuff.
Treasury refunding, that's happening too.
Nice job sliding that in.
Katie, we just spoke to Max Wasserman over at Miramar Capital, who talked today about this being a relief rally. He said, people were concerned going into the weekend, as you mentioned, Scarlett, that things could escalate even more than they did between Israel and Hamas. But I question why we're seeing the bond market moves that we're seeing today, and we're also seeing the equity market moves.
Yeah, of course, you see that sell-off continuing in the bond market, even as we get the Treasury's borrowing estimates. Less than expected, still, amazing amounts of money, but still that wasn't worth too much when you look at what happened in yields afterwards.
Yeah, just a bit of a leg lower in both the 2-year and the 10-year, but not enough to change the overall direction. There's the closing balance, and it does look like we're going to finish higher on the day. It doesn't look that way for the month, but that's a separate story. We have the S&P 500 up by 1.6%, or I should say 1.2%. I'm looking at the Dow Jones up by 1.6%, and the NASDAQ gaining 1.2% as well. And the laggard here is the Russell 2000 up by 2/3 of 1%, but notably higher as well.
All right, we're going to get a breakdown into the groups in just a moment, some individual movers. We're watching some earnings, but if I look at the S&P 500, guys, 399 names, Scarlett, to the upside, 102 to the downside, 2 unchanged. So investors willing to do some buying today.
Willing to do some buying. That shows up in the industry groups as well. 24 industry groups. The only sector in the red right now is the autos and components one. That includes Tesla, off by 4.1%. See that red bar at the very bottom? That's the autos group. Everything else in the green, including, let's see, 4 groups that have gained at least 2%. Retail, telecoms, and transportation leading the way here.
All right, guys, let's get to some of the individual gainers in today's session. And McDonald's is definitely on that list. Up 2.5% at its highs, finishing the day with about a 1.7% gain. Has to do after it came out with its quarterly update. Third quarter sales and profits, it was a beat thanks to higher prices and movie-inspired ads. U.S. customer traffic, though, it did dip for the first time this year. So just something to keep in mind that not every report. What?
Okay, I'm sorry to cut you off. Romaine's not here, so I'm going to interrupt you instead.
What? No way.
Why are people freaking out about Ozempic and stuff when it comes to the donut places, but not McDonald's?
Donut places.
Like Chris, I don't know. I'm just asking a question. I don't know.
That's a fair
Because
question.
we still eat burgers. Burgers are protein.
They have salad.
Donuts
they
are
have
not
water.
protein.
Like they
have some
have
good
pricing
water.
power, which is also
They have water. They also have shakes. They're delicious.
and French fries.
And French fries are vegetables.
All right, comp sales also a beat. I'm
Sorry.
moving on. I'm ignoring the substitute Romaine today. Comp sales a beat, up 8.8% in the period versus 7.8% average of the estimate we polled here at Bloomberg. Delivery digital channels also contributed to sales growth. It was its slowest sales growth, though, of the year. So just a little bit of a caveat. Western Digital, number one gainer in the S&P 500, up 7.2%. It was up more than 13% at its highs today. The company said it would separate its HDD and flash businesses into 2 public companies. It also reported its first quarter results and gave a forecast. So investors liking some of that news, although not as enthusiastic as it was earlier in the session, as we said, up more than 13% at its highs. And then Amazon, this was an outperformer in today's session as well. We'll bring up the numbers for you. It was up about 3.9% in today's trade. Top in the NASDAQ 100, Fidelity Magellan adding Amazon to its investments, a new buy. They added about 9.14 million shares valued at $1.16 billion. So that was definitely a standout. Also, the analysts have been raising their price targets on the company since it reported. So there's some momentum in that one, you guys.
All right. Well, I was actually, even though we were up on the day, had a pretty easy time finding in the S&P 500 stocks that did move lower. Scarlett, you talked about Tesla a little earlier. The worst performer on a points basis in the S&P 500, down 4.81% today. It closed at its lowest level since May, we should note. Panasonic Holdings earlier in the day reported that its automotive batteries operations fell to their first loss in the quarter in 3 quarters on lackluster demand for Tesla Model S and Model X. So that could have been one of the reasons it moved lower. We also saw BYD, it's China's top-selling car brand, did report record quarterly profits. So perhaps because a competitor did report some good numbers, especially in the wake of that recent earnings call where we heard a dour Elon Musk on the call. On semiconductor, the worst performer on a percentage basis in the S&P 500, closing down more than 20%, 21.77%. Biggest intraday drop going all the way back to March of 2020. The company gave fourth quarter forecast that was weaker than expected in terms of adjusted earnings and in terms of revenue. Similar reason we saw moves lower for Revity, closing down today, more than, 16%? Wow. The deepest intraday plunge since December of 2008, at its lowest down to 2002 levels at one point in the day. This after the company cut its revenue forecast for the full year, Scarlett.
Actually, it's my
Katie,
turn, Tim.
excuse
Let's get
me.
to the bond market because this is really interesting here. We did get the Treasury come out with its net borrowing estimates. Net borrowing estimates for October through December for that quarter came in at $776 billion. That had been predicted at $852 billion. Even still, even with a little bit of relief there, maybe the Treasury is going to announce that they're going to have to sell less debt on Wednesday. You didn't see too much of a reaction in the bond market. That sell-off continuing. You can see 2-year yields up 3 to 4 basis points. 10-year yields, similar story. Less so across the curve, but all told, pretty small moves, but just continuing that trend, Scarlett, of this sell-off, those marches towards higher yields.
Yeah, today's the stealth sell-off, but it's still happening, right?
Exactly.
As long as you see those yields moving up. You know, when it comes to U.S. earnings, we've seen the bulk of the numbers. I'm really excited about Apple because I can't wait to hear what the company has to say about China in particular with Chinese consumers. I wouldn't say souring on Apple devices, but the government certainly is souring on Apple devices. And
we are getting some
like
evidence,
Huawei
Scarlett, that the Chinese consumers are souring on at least the latest high-end version of its iPhone. We're going to be talking about that with Mark Gurman a little bit later because it sounds like there's some real competition from Huawei.
Yeah.
No, it's interesting, right? Yeah, the increased competition in the domestic market. It's one of those markets that Apple has certainly, you know, identified, like so many other companies, as a tremendous growth opportunity. So you do wonder if you have individuals there saying, nope, they're going to be buying. Although Mark has said to us that it's still considered kind of a coveted device, right? An Apple device in China.
Super high end, but it's also not as sticky in China because a lot of the apps that they use there are over the top apps, right? These super apps that you can use equally well in an Android or an Apple.
Well, before we get to Apple, we do have some results from Pinterest coming out with their third quarter numbers. Third quarter revenue came in at $763 million. The estimate had been for $744 million. Third quarter EPS, though, 1 cent. Had been expecting a loss per share of about 10 cents over a year. You take a look at the third quarter adjusted EPS, that was 28 cents. The estimate had been for 20 cents. So a beat there, and you can see that reflected in the shares, toggling around a bit, but clearly higher, up by more than about 5%. And this was a company that needed it because coming into today's close, this company only up about 3% year to date, but clearly some good news here, at least in after hours initial trading.
You wonder if some of this, the big bounce in the aftermarket, up 5.5%, is because about 5% of the float was shorted. So maybe a little bit of short covering potentially. Keep in mind that this is a stock, 25 and change that it closed at in today's session, but it is down more than 70% from its February 2021 high. So a lot of ground to make up if that was the more accurate valuation, if you will, or metric.
Yeah, I'm going through the press release here, and the company's CEO, Scarlett, Bill Reddy, saying that the company's seeing its best market fit at this point in years for Pinterest.
I still don't get this company and what it does and why people go to
I'm
it.
glad you said it and not me.
I will
Weddings
say,
and renovations.
I'm with you too.
The amount of time that I spent thinking about Pinterest relative to the amount that I hear about Pinterest is pretty skewed. But apparently, if you look at their monthly active users, 482 million. That is an 8.3% increase year over year, and it beats estimates. So people are clearly using it.
We gotta work on our vision boards.
Apparently,
I think.
Yeah. Who would have thought the business model would be, I'm going to monetize mood boards.
Oh, did I say it wrong? Mood board.
No, mood boards, vision
boards.
Same thing.
It's whatever you want it to be.
I'm just going to mention real quickly, Tenet Healthcare also out, and that stock's up about 3% in the aftermarket following its quarterly update. So for more information, head to Bloomberg.com. And Pinterest, still up 6%. Scarlett, I'm with you. We'll try and figure out what we're supposed to do
in
with
fact,
this.
we'll get into it with Mandeep Singh next, right after the closing bell. That does it, right, for our cross-platform coverage?
Yeah, that's a wrap. We'll see you guys again tomorrow beyond the bell. Join us at 4 p.m. Wall Street time.
Life in the fast lane, moving at the speed of life, and I can't slow down. I don't really know where I'm headed, 'cause I'm
All right, everybody, just keeping an eye on, as we said, Pinterest out in the aftermarket. It's up about 6% here in the after hours following its latest update. Third quarter revenue is a beat. Third quarter adjusted EBITDA is a beat. Third quarter monthly active users is a beat. And third quarter adjusted EPS, 8 pennies better than expected. So, again, about a 5% float that is shorted. So again, there could be some short covering going on, but it looks like a good report, a positive report based on expectations for it.
Yeah, I'm now seeing it's up 7 about 7% in the aftermarket, Carol. Revenue in the third quarter growing 11% year over year. Global monthly active users increasing 8% year over year to 482 million. GAAP net income coming in for the third quarter at $7 million. Adjusted EBITDA was $185 million for the third quarter.
Yeah, exactly. All right, so watching that one in the aftermarket. Tenet Healthcare also up about 3% after it just reported results. It's third quarter, no, forgive me, outlook, fourth quarter. Let's go there. Adjusted EBITDA of $836 million to $936 million. The estimate is for $915.7 million. Fourth quarter adjusted EPS from continuing operations, $1.12 to $1.74, quite a range. The estimate out there is $1.75, so that would be seen as a miss. And fourth quarter net operating revenue of $5.13 billion to $5.33 billion. Again, a bit of a range. The estimate out there is for $5.25 billion.
All right, well, we got other companies reporting as well. VF Corp shares are down 5.7% as we speak. Tumbling after withdrawing guidance. The company says it does not see Vans improving in the second half of 2024. That's the shoe company that VF Corp owns. Adjusted, I should say, free cash flow from VF Corp is expected to be from $600 million from prior guidance of about $900 million.
All right, let's talk a little bit about Apple. Apple did finish higher, more than 1% higher on the day. In just under an hour, it is expected to unveil a new iMac and updates to its high-end MacBook Pro. Try saying that 5 times fast. MacBook Pro. Company also is scheduled to unveil the next generation of its computer chip, the M3.
Let's get into it with Mark Gurman. He is Chief Technology Correspondent for Bloomberg News. He joins us from Los Angeles. Mark, first of all, is this timing of this event, a virtual event at 5 p.m. California time, the day before Halloween? This is not something they typically do, right?
They're trying something new here. This is absolutely an experiment, something new to try out. This is one of their narrower events in terms of the interest. Obviously, there's going to be lots of speeds and feeds. It's low volume Macs. It's not a new iPad, Apple Watch, iPhone, or AirPods, right? So if they're going to try something new, this is the time to try it, especially given that the date, shook out to be right on the verge of Halloween, on the eve of Halloween. So, they were already going to try something. Now's the time to do it.
What are we going to get, or what are we expecting, or what are you watching out for?
There's going to be new MacBook Pros, new iMacs, and new chips across the board for those computers, the M3, the M3 Pro, and the M3 Max. The regular M3 will go into the iMac. The laptops are going to get the M3 Pro and M3 Max. Serious horsepower on the graphics side, specifically on those MacBook Pros. Probably 20% improvements on the CPU side, so the computers will run about a fifth faster than the prior generation. For the iMac, this is the first update in nearly 3 years, right? So this is a big deal. And lots of people have been waiting for that iMac update. One of the most frequent questions I get is, when is the new iMac coming out? And so that's finally getting answered today. So I'm happy to stop getting those questions.
Well, I have to say, I'm sorry, Mark, if I ask you. I'm one of the people
Don't do it. Don't do it. Don't do it, Tim.
I'm not going to ask him. It's not my iPhone upgrade cycle yet, so I haven't asked Mark. I want to talk about the chip story here, Mark, because last week we saw Qualcomm announce the Snapdragon X. We saw NVIDIA and AMD are working on new processors that rely on ARM designs. It's the same underlying tech used by Apple and Qualcomm. Help us understand what's going on with Apple chips in-house and how it's been after a few years, and if these competitors mean anything.
And is it really better, potentially?
Well, Apple chips, they performed super well, right? But remember, the last time they released a new generation of the chip was a year and a half ago, right, with the MacBook Air M2 in June 2022. And since then, you've seen that Qualcomm has rolled out, like you said, the Snapdragon X. They're promising better performance than the M2 chip. Apple's chip has been waiting in the wings. It's really been a matter of being able to produce these new chips on this 3-nanometer architecture from TSMC, which is really difficult to produce because of how highly technical it is, how small the chips are, the amount of transistors, the amount of components on each individual board. So there has been hiccups in chip production for 3 nanometers. So this is a major feat of production, manufacturing, and engineering on Apple's part. This is something no other competitor is going to have for months, if not years. So this is a pretty big deal for Apple. And those manufacturing technologies are what allow these chips to be more efficient, better battery life, and faster.
What's more important, the MacBook Pro or the iMac updates or the M3?
I think it's probably the M3 chip, because you're going to see that chip go across the line eventually, go well beyond these two devices, right? It's going to eventually go into the iPad Pro as well. So this is just the beginning of a new cycle, a new generation of Apple components.
Let's bring in the China story, Mark.
Oh, let's do that.
So there is growing evidence that Apple's latest iPhone, the Pro, is it the Pro Max 15? I mean, or just the iPhone 15, Mark? Which one is having the most trouble in China?
Well, it's hard to ascertain at this point based on what we're seeing in terms of reading the tea leaves. You know, the phones are doing pretty well, right? But we don't know the actual numbers until they're going to report results. There's lots of analyst reports coming out so far indicating that the phones aren't doing so well. They don't really differentiate between the Pro and the non-Pro or the Pro Max. So we're really going to have to wait until earnings results hit for the first time for the full quarter of Q1 at the tail end of January or early February.
I find it just, interesting. We talk so much about the importance of the Chinese market still for so many multinationals. China is an important market, correct? I mean, I'm not trying to be an idiot
God,
here.
It's hugely important. No, that's not the case at all. It's about 1/5 of sales, so 20%. So it's incredibly important. You can't lose 20% of sales, right?
Right.
And so they really need to keep building products that are going to be interesting to the Chinese market. And you also have to appease the Chinese government so you continue to operate there like no American company can, and to get the production prowess you can get from China's economy, Foxconn, Pegatron, Quanta, et cetera.
Does China also want the connection with Apple, despite all the turmoil?
Absolutely.
Yeah.
They need it because their big business in China, as everyone knows, is production and factories, right? And Apple, not only is China one of Apple's biggest customers, but Apple is one of China's biggest customers. So it all, is part and parcel.
I'm having you restate it because I feel like we get caught in all of the stories about the geopolitics and like things are getting cloudy and murky. And then you just say so simply, like, listen, both sides need each other in terms of China, Apple specifically. And then you can kind of extrapolate that out in terms of the relationships that other companies maybe sometimes have to still, and will have with China. So I just think it's important.
Yeah, I'll say it again, right? Just as big of a customer that China is for Apple, Apple's a big customer of China. So they both have a lot to lose if this relationship sours, and they have a lot to gain if it doesn't.
So are you not reading much into the research that we've seen, the survey-based research that we've seen that says that the iPhone 15 is falling short, that Huawei's new phone is increasingly successful there?
My eyes are glued on this. We are paying a lot of attention to it, but as of now, it's speculation at a time when we're soon going to have pretty good indicators, right? On Thursday, it's Apple's earnings report. We'll get a little bit of color on what's going on, but we'll know the full picture at the end of January. So I wouldn't want to rush to conclusions, but certainly we do believe there is a little bit of a slowdown there. The question is how much.
Okay, Mark, just in the last 45 seconds that we have, give us an idea of what we need to be watching for on Thursday when Apple reports.
Yeah, Thursday certainly is, watching those early iPhone numbers. We'll get about a week and a half of iPhone 15 sales. We'll get color on the Q1 quarter, and we'll know if they're going to return to growth or not for that quarter. And that's going to be very important to watch if they're going to return to quarterly growth for that holiday period. We're also going to want to hear some increased thoughts on some of the why about what they're going to be launching today. There's a reason why the earnings report is scheduled for 2 days, 3 days after. And we're certainly going to want to see how things are going with the iPad, which has lost a little bit of momentum lately.
So appreciate it. You're incredible. I know it's a busy day. Mark Gurman, go. He's Chief Technology Correspondent for Bloomberg News, joining us from Los Angeles. So much going on, obviously, and understandably with this company.
I'm also watching shares of VF Corp, Carol. They're down 13.4% in the after hours. This after withdrew its guidance. Second quarter adjusted EPS from continuing operations also missing estimates.
All right. It's about a $6.6 billion market company. We know plays in the apparel space, and it's certainly been on everyone's radar for a little bit. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Pinterest shares now rallying by 12% in post-market trading after the social networking company reported adjusted earnings per share for the third quarter that beat the average analyst estimate. An update for the Dow, the S&P, and NASDAQ, a 511-point gain today for the Dow Jones Industrial Average, up 1.6%. The Dow now at 32,928. S&P 500 index advanced 49 points, up 1.2%, back at 4166, while NASDAQ was up 1.2% to 12,789. 10-year yield, 4.88%, with a 2-year that's yielding 5.04%. Spot gold down $10 the ounce to $19.95. And a big move lower today for West Texas Intermediate crude, down 3.6%, $82.49 for a barrel of WTI. Broadcom and software maker VMware say their $61 billion merger is on track to close before a November deadline. Shares of Broadcom up 0.3%, VMware up today by 3.11%. Again, Pinterest out after the close of trading. That stock now up by 11.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really appreciate it. Well, shares of Hertz closing at a record low today. This after the company last week missed earnings estimates amid Tesla price cuts and then the high price of repairs for those EVs. Really eager to hear from our next guest about all things when it comes to the car rental industry here in the U.S. and around the world. Chrissy Taylor is president and CEO of Enterprise Mobility. It's the company, Carol, that until recently was known as Enterprise Holdings.
That's right. They own National Car Rental in Alamo. Chrissy, by the way, the third generation of the Taylor family to run Enterprise. Her grandfather, Jack Taylor, founded Enterprise back in 1957, and his son, Andrew, was CEO before Chrissy. So it really is a family-run business. Enterprise, by the way, has a fleet of 2.3 million vehicles and 90,000 employees around the world. And we are so delighted to have Chrissy here in our Bloomberg Interactive Broker studio. Welcome, welcome, welcome.
Thank
How are
you so
you?
much. I'm great. Thank you so much for having us, and we're excited about this announcement. Once Enterprise Holdings and now Enterprise Mobility.
Why the change?
Yeah, we have been moving, Enterprise really has been moving mobility forward for 65 years. And we are excited because all of our business lines, like daily rental, are gigantic and are a huge opportunity for us. And so over 65 years, we have evolved in terms of geography, customer segments, and products and services that we offer. And so when my grandfather founded Enterprise as a leasing company, we're now known as the world's largest rental car company. We have car sales, a retail car sale operation. We've got car sharing. We've got van pooling and commuting. We've got a truck rental business. We have global operations. We have hourly. We have luxury. We have a variety of technology solutions with partners. And so Enterprise Mobility better fully represent who we are and what we do today.
I don't hear drones. Are there going to be drones?
There aren't drones, but we are definitely leaning into the future about what's next.
So you're a private company, so we don't get a good look every quarter, under the hood, so to speak, of the company. But if you think about the whole pie, what portion of that is daily rental versus everything else you just mentioned? Because I think it's fair to say a lot of consumers know Enterprise for its core business.
They do. The world knows us as rental car, and it is a majority of our business today. However, the original business that my grandfather founded, which is today Enterprise Fleet Management, has 675,000 vehicles, where daily rental in North America has 1.2 million vehicles. So fleet is half the size of our rental business. We've got 90,000 vehicles in our truck rental operation. And we continue to grow our footprint with retail car sales with over 150 dealership locations. So when we look across the Enterprise Mobility portfolio, there is a ton of opportunity, not just in rental. We love rental, but we are way more than a rental car company. And when we look at the future in growth, it really is in a lot of these other business lines where our people have opportunities to develop careers and stay with us for the long haul. It's great.
Well, what is the most profitable part of your business?
So when we look across our entire business, all of our businesses contribute to the bottom line and revenue. And so we had a phenomenal fiscal year, a record-breaking fiscal year. And so we measure that in terms of employee engagement has never been higher. Customer satisfaction around the globe has never been better. And those two things drive business results. We look at our international...
Don't you think the economy also drives business?
Absolutely.
So
The Traveler is back on.
Yeah.
No question. Sorry, I didn't mean to cut you off.
No. Go. But Tim and I were talking and kind of getting ready. Like, we love companies like this because it does give you a great snapshot of the economy at a time when we feel like, Chrissy, we get such mixed data points from day to day, week to week.
So the Traveler is back on, and we see that at the airport, and they want to travel. The business traveler is back. Only 30%, when we talk about our daily rental business, happens at the airport. 70% of our business happens in our suburban market.
Who are the people who are renting in suburban markets?
We do have leisure customers, so when somebody's going away for Thanksgiving, they might drive from St. Louis to Chicago, but a majority of that business is long-term contracted business. So Bloomberg, when you're traveling for business, you go rent a car. We have many of those business customers that rent in the home city. And then we also have a large part of our business. If you unfortunately get in an accident, your insurance company will refer you as the rental, as we are the replacement vehicle. And so it's long-term contracted business that we are helping the communities move.
Let's talk EVs. How do EVs fit into the future of mobility?
So we absolutely embrace the responsibility and the opportunity to transition our fleet. And we want to make sure we take a long-term perspective on that and strategic look and put the customer at the center of everything that we do. There are three things when we talk about electrification. One, customer experience. We want to make a positive difference in that experience for the customer because it is new technology and they don't understand. Most people don't understand charging. The second thing we focus on is power in our communities and infrastructure. So where are you charging in all of our local communities? And then we want to make sure that that charging, it's equitable and accessible because we have 9,500 locations, not just at airport, but in a variety of communities that people need access. And so for us, it's not about the numbers we're putting in. Yes, we've got electric vehicles in our fleet, but it is about making sure the customer has a great experience and we are a trusted, valued partner in that transition.
Are you slowing, though, the purchase of EVs? And we're asking because it does feel like there's some momentum behind kind of a slowdown.
And Hertz talked about it just last week.
Consumers, yeah.
We have thousands of vehicles in EVs in our fleet, both in Europe and in the US, and our buy is a continuous buy, and so we will continue to add EVs, but it will be at the pace of our consumer. And also our fleet management business, it's really important. It's not just about adding vehicles into our rental fleet. Our fleet management business, we help small to medium-sized businesses with their goals. Domino's Pizza is a great example. They are an awesome partner and they are electrifying their delivery fleet. We are the fleet management company behind that, and we are a trusted advisor, and we love to play that backseat role to help Domino's achieve their goal of delivery, which is great. So it's about buying EVs, but it's also about being a partner and a trusted advisor.
Well, how many EVs do you guys have in the traditional rental car fleet right now?
So we have thousands. So we have probably about 5,000 vehicles in traditional rental, and we will put them we put most of them in our suburban market where people live and work.
And do you see that number growing? How do you see that number growing over the next few years?
As our fleet grows and as the customer demand grows, we will continue to add those vehicles into our fleet. It's just like a suburban.
Are you thinking twice about it, though, after what we saw from Hertz, where they're saying, okay, the value of Teslas have gone down, so that's hurt us as a business. And then the repair costs are more expensive than we thought. Does that make you think differently?
So when the customer demand, we will continue to move at the pace of the customer.
No, we get so I guess what we're trying to figure out is like, are consumers demanding them less?
The consumers, the demand for consumers and EVs is very low right now. That is why it is important that customer experience is on point. So we have thousands of them. We do transactions. People do ask for EVs.
Right.
But it's not to the point where someone is asking. The difference would be, or this example would be, a suburban rental over the holidays. We know everyone wants minivans and Suburbans. They're loading up the cars. They're going on holiday. Some people want an EV. That's not to the point of where we're at. And so fleet plans are very, very important in our business. We look at it every single day. We want to make sure that we have
She's like, I look at the numbers.
I look at the numbers. We want to make sure that our fleet is diverse and represents consumer demand so that we can meet their expectations and provide a great experience. And we have a huge role to play in that. So we need to be on point when we're renting an EV. It's not only just it's electrified.
Right.
These cars, have you all driven an EV?
Yeah.
Their technology is, this is a technical term.
Yeah, I don't know if I
it's
want
off
some
the hook.
random person getting in and driving it for the
can-
first time as a rental.
It is very complicated, and the average age of a vehicle
They're
on the
fast.
road is 11 years. They are fast. There's a lot of technology in it, and it's electric. And so we need to be very mindful and thoughtful of what is the customer experience. So I know I'm a broken record, but it is really important that that customer experience is high, and we do the right thing by the customer.
Top of mind when you look at the next 6 to 12 months, does recession ever come into your mind right now?
We are very optimistic. We do not see travel slowing down right now, and in all of our business lines, with truck rental is a good indicator of the holidays because they're last mile. They're delivering products and services that are coming for the holidays, and that business is doing very, very well, and we see a strong holiday. Daily rental, we see a strong holiday, and throughout the beginning of next year. So we are very optimistic about the next 12 months.
Cool.
Come back. This was really fun.
Yeah, come hang out with us again.
I think we're done.
We could talk so much more. It's like such a fascinating space, and between cars, consumers, it's a lot of stuff. But we've got to do some news. Will you come back soon?
Yes, thank you very much.
Don't jump yet. We're so delighted. Christy Taylor, she's President and Chief Executive Officer of Enterprise Mobility, joining us here in our Interactive Broker studio.
Hey, let's go to Washington, D.C. now. We got Nancy Lyons standing by. She's in the Bloomberg 99.1 newsroom there. Hey, Nance.
Thanks, Tim. Israel says it is expanding its ground operations in Gaza. Prime Minister Benjamin Netanyahu says, though, there will be no ceasefire.
The horrors that Hamas perpetrated on October 7th remind us that we will not realize the promise of a better future unless we, the civilized world, are willing to fight the barbarians.
Netanyahu is also dismissing calls for him to resign over security failures in the October 7th attack. Israeli officials do say a female soldier that had been kidnapped by Hamas during the October 7th attack has been freed today during Israel's ground operation. Hackers obtained access to about 632,000 email addresses of employees at the Departments of Defense and Justice. That's according to a report from the U.S. Office of Personnel Management. Bloomberg's Ari Natter with more.
This is a part of the broader Move It hack that came out last summer where these hackers called CLOP were able to exploit this flaw in this file transfer system before it was patched. So this is part of the broader hack, which saw hundreds of companies affected and millions of people had their data exposed.
Bloomberg's Ari Natter says the report notes that the compromised data was generally of low sensitivity. A Denver court has been hearing arguments today on whether former President Trump should be kept off the state's ballot because of his alleged role in the Capitol attack January 6th. Sean Grimsley represents the plaintiffs from the Citizens for Responsibility and Ethics.
Trump incited a violent mob to attack our Capitol to stop the peaceful transfer of power under our Constitution.
Trump's attorneys argued that removing Trump from the ballot violates the rights of voters. Global news 24 hours a day and whenever you want it with Bloomberg News Now.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg, keeping an eye on shares of Pinterest after hours, now up by 9.4% after the social networking company reported adjusted EPS for the third quarter that beat the average analyst estimate. The Dow, the S&P, and NASDAQ all rallied today. Stocks rose, treasuries fell, oil down 3.5% as Israel's ground incursion into Gaza appeared less extensive than investors had feared. S&P was up 49, a gain of 1.2%. The Dow up 511, up 1.6%. NASDAQ up 146, higher today by just about 1.2%. Well, as for the reasons for the rally, Max Wasserman is founder and senior portfolio manager at Miramar Capital, and he was a guest right here on Bloomberg Business Week.
I think today is more of a relief rally because the market sold off a little bit, and you're seeing some people guess about what the Fed's going to do and if they stay pat. And you're also thinking that the excursion in the Middle East is not flaring up as dramatically as people thought it might have over the weekend.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. 10-year yield, 4.88% with a 2-year, 5.04%. Spot gold down $10 the ounce to $19.96, drop there of 0.5%. West Texas Intermediate crude down 3.4%, $82.62 a barrel. And Apple set to capitalize on a computer market resurgence when the company unveils 2 new Macs and processors. Today, the company will be holding an online event at 5 p.m. California time, dubbed Scary Fast, where it's poised to announce a new iMac and updates to its high-end MacBook Pro. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stenovic live here on Bloomberg Business Week. So important to New York and really the New York City economy, Tim, and that is the financial services sector. Among those tasked with keeping an eye on the health of those companies in that group, the New York Department of Financial Services, which supervises and regulates the activities of nearly 3,000 financial institutions. We're talking about assets totaling something like $9 trillion. And so we're talking insurance companies, health insurers, and of course, the banking group.
Yeah, more than 1,200 banking and other financial institutions. Bloomberg Wall Street Week host David Weston, he's with us right now, and earlier he spoke with Adrian Harris, the superintendent of the New York Department of Financial Services. David joins us in our Bloomberg Interactive Brokers studio with more. David, she's got a big job. She oversees a lot. What did you learn from her?
Well, we learned about banking, and we learned about crypto, and we learned about FTX and why it didn't happen on her watch, as she was quick to point out. But as you suggest, we tend to think about federal regulation across the board. We tend to think about federal authorities regulating, but the New York State regulator has a lot of authority, and in some ways is ahead of the federal regulators. But one of the things I asked her about was what happened last March with Silicon Valley Bank and with Signature, by the way, which is under her supervision. What went wrong there? And more importantly, did we learn anything from it? Did the regulators learn anything for the next time? And she had some thoughts about what they learned for the next time.
There's so many learnings we've taken, and DFS as well as other regulators published reports about that. I think one is thinking about the modernization of regulation. When we think about the liquidity issues that these banks were facing and how fast the deposits fled, first from Silicon Valley Bank and then how that fire spread from California here to New York and other banks around the country, now understanding the digitization of money and how that impacts deposits. So, of course, the FDIC is looking at the insurance thresholds. But I spend a lot of time thinking about how we operationalize our regulations. If we're examining banks in a certain time frame, can we make that examination go faster without sacrificing rigor, give feedback to the institutions more quickly, and then hold them accountable for remediation so that that feedback loop becomes tighter and we don't have some of the issues that happened with SVB and Signature where things were going unremediated for cycle after cycle after cycle with respect to examination. So there's a lot to be learned with respect to the rules in particular, but also how regulators are doing their job and how bank management's doing their job.
So there you have it, sort of bank regulation at the speed of light, both with respect to people withdrawing using their smartphones.
Good luck with keeping up with that.
No kidding. But also, once you find something out, you got to jump on it right away because, as you know, the world just moves so quickly, and maybe the regulators were a little behind it.
I'm wondering about, you think of New York and financial services, David, and you know, It's sort of a story from the last couple of years, but you can't help but think about companies that have moved out of the city and, what the state is trying to do in order to keep companies here in New York.
Okay, so this is interesting. I'm really glad you asked that, Tim, because at the end I asked her, she always says that New York is the financial capital of the world. And
I've heard that before.
Yeah, I said, is it still? And will it be tomorrow? And what is your role in making sure? And she said her role was to make sure that there is robust regulation that is clear and enforced. I said, well, is that a zero-sum game? Because the more you regulate, does that drive people away? She said her experience is exactly the reverse. That in fact, for example, they're way ahead on crypto and virtual asset regulation. They're way ahead on it. And she said they're attracting people because there's some certainty, where certainly at the federal level, you have no certainty whatsoever. So she believes if you have clear, robust regulation, actually will attract business. That's her theory, at least.
I'm afraid income tax might have something to do with this also.
Yeah, that's not her job.
I know it's not her job, but,
What else did you want to know from her?
I wanted to know specifically, to go back to FTX, why wouldn't it have happened if we'd regulated it properly? And she did quickly point out they did not give a license to FTX. And she does think that if you regulate it appropriately, because they have pretty robust regulations that have to do with checking out the character of the people involved, including the boards, making sure what their track record is, making sure they're capitalized properly, making sure they have proper disclosures. So she thinks that it actually can protect. And as you know, they've got a green list, which is a limited number of currency coins that you can approve. And a lot of people they've not. They've just not given approval to. But she says people coming around the world, not just around the country, like from Illinois, but around the world, are coming to her to say, okay, how are you regulating these things?
Some of the stuff, like we always kid, is it's complicated. Does she have all the staff and people she needs to do all that and keep abreast of everything that's going on?
She's hired 60 people specifically in crypto. And I said, well, how do you come up with the money? Because you go to Albany, they don't have a lot of extra money right now. She said, no, we're a net positive for the budget. That they returned $277 million to the budget last year because they're self-funding from the fees that they charge, but also the penalties they have. So they said, we're actually giving them money in Albany. So she doesn't have that problem.
I wonder if they're able to pay market rate, unlike other government agencies.
But worse than that, she said specifically, I asked her not on the air, but off the air.
Yeah.
She said that her people average about $100,000 a year.
What would they earn in the private sector?
Well, but forget the private sector. The federal government pays something like 30% more.
Yeah.
Because she says one of her biggest problems is she's training a lot of young people that then go off to the federals, and she's arguing with Albany to say, you've got to give us higher salaries, because those are important jobs and they're tough jobs.
Yeah, absolutely. I love what
I was just going to say, I agree with that. You've got to actually pay in order to attract and retain the talent, especially this is a high-cost state. So if that's what, if you're competing with the private sector, then it's going to be tough to attract those people.
It is a high-cost state, although she also pointed out a fair number of people are in Albany. They're not in Manhattan. And there's a difference in the cost of living between Albany and Manhattan.
No.
That is true.
That's what I've heard. I've heard rumors to that effect.
But I think it's very interesting what she said about kind of clarity of regulation, whether it's on crypto or any kind of fintech, if you will. Because if not, we know the Europeans are moving very aggressively, or people or various regulators outside the United States are moving very aggressively when it comes to things like crypto, that if not, then that market is going to be developed over there. But thinking about clarity here in the United States will give some kind of calmness, if you will, to people moving forward on it.
And exactly to your point, it's not just that they're adding new regulations. A lot of them are clarifications. They're issuing advisories, advising people how it works. That's exactly what they're trying to do, is be very, very clear about how it works. And she believes that will build a market rather than take away from it.
Why did you want to talk to her today? Was it because of the SBF stuff and the trial?
Well, I'm interested in the regional bank issue.
Okay.
And what's left over, particularly, I mean, we have so much money in losses, paper losses on balance sheets, particularly the regional banks.
Right.
And I was curious about, is that going to blow up in our face at some point?
Is she still worried?
She thinks we have to look at it really hard. And you can never count it out, but she thinks right now the banking system is in reasonably good shape. But she was concerned about real estate, as you wouldn't be surprised. She's concerned about real estate. As if those things come up for refinancing, it's going to be a challenge.
30 seconds left. Just, she has a law degree. She has an MBA. What's her professional background?
Well, she actually was at Sullivan Cromwell. We were talking about this under Rajan Cohen, who is the dean of bank regulation in this country, and she's sort of a protege of his. And then she went into the Treasury and was in a policy position at the Treasury, and then over at the White House. So she's gone into public policy.
I wonder if she goes back to the private sector later, or if she continues public service.
She's been there about 18 months or so, and she says she loves the job. So I think she'll go on to something else. I have no doubt. She's, in my opinion, very talented, very specifically focused, and really able. But it's too soon for her right now. She's got a lot more work to do.
Well, thanks for coming by.
It was my great pleasure. Thanks for having me.
Really appreciate it. David Weston, of course, host of Bloomberg Bloomberg Wall Street Week. You can catch that on Fridays at 6 p.m. Wall Street time on Bloomberg Radio and Bloomberg TV. If you missed any of his interview with Adrian Harris, just head to Bloomberg.com or the Bloomberg Terminal. This is Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. VF Corp shares now down by 4.8% after hours. VF Corp has withdrawn its guidance for the fiscal year and says it will replace the president of the Vans brand in an attempt to satisfy Wall Street as two activist investor groups raise the pressure on the apparel and footwear conglomerate. The future of one of the world's biggest and newest copper mines has been cast into doubt after Panama's government said it will hold a referendum on the project as it attempts to quell mass unrest. Shares of mine owner First Quantum Minerals moved lower today. They plunged by 28%. Sources tell Bloomberg General Motors has reached a tentative agreement with the UAW to end a 6-week-old strike with similar terms to the deal signed by Ford on October 25th. We talked to Bloomberg Detroit Bureau Chief David Welch, who says there is still more work ahead.
These contracts do actually take some time to kind of get ratified and that sort of thing. You know, and there will be this sort of almost Byzantine process where they go about, you know, trying to get everything ratified. And, you know, once that process is in place, then the companies can kind of start looking at, you know, where they're going to invest and how quickly they're going to ramp things up. And I think that's, you know, it's going to be tough for them to do just kind of cranking up EV production and all this other stuff, it just takes a little bit of time to turn the ignition on these things.
And that's Bloomberg's David Welch. GM shares up today by 0.5%. Those are our top company stories. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week. Tim Stenovec and Carol Masser live in the Bloomberg Interactive Brokers studio in New York. Let's check on the latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nancy.
Thanks, Tim. Israeli Prime Minister Benjamin Netanyahu says Israeli ground operations are expanding inside Gaza, so do not expect a truce anytime soon.
Calls for a ceasefire are calls for Israel to surrender to Hamas, to surrender to terrorism, to surrender to barbarism. That will not happen.
On the humanitarian front, there is some promising news in Gaza, where U.S. officials say more aid is reaching Palestinian civilians. Matt Miller is a spokesman with the State Department.
Yesterday, 45 trucks carrying food, water, and other humanitarian aid moved through the Rafah crossing into Gaza, marking the highest single-day shipment to date and bringing the total number of trucks that have made it into Gaza to 150. We aim to surpass that number today, tomorrow, and beyond.
Matt Miller says communications in Gaza are slowly being restored. They're also making progress in providing fuel supplies. President Biden says he has spoken with the head of the United Auto Workers Union, Sean Fain, and congratulated him for his successful negotiations with the big three automakers.
The president recalled his backing the workers on a Detroit picket line and lauded the generous new contract.
Collective bargaining works for companies. Record profits leading to record contracts. And the commitment by the big three to create more full-time middle-class jobs and invest tens of billions more dollars building automobile's future here in America.
The president said the workers would return to the assembly lines right away and not wait for the voting that would formally approve the contracts. In Washington, Irv Chapman, Bloomberg Radio.
Matthew Perry fans are leaving floral tributes outside the Friends apartment in New York City. This following the actor's death over the weekend. Officials confirm an autopsy was completed Sunday, but no word yet on the cause of death. Perry was found dead in his hot tub at his Los Angeles home Saturday. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Tim and Carol.
All right, Nance, thank you so much. Nancy Lyons with World and National News there in our D.C. Bureau. Carol Masser along with Tim Stenovec live here on Bloomberg Business Week at Bloomberg headquarters in New York City.
Do you remember a couple weeks ago, Carol, there was that story in Bloomberg Business Week?
Yes.
Max Chafkin wrote about it. And it was about this idea that Facebook and other social media companies, which rely on more than 98% of their revenue comes from personalized ads.
Yes.
And he was saying, hey, in Europe, they're thinking about doing subscriptions instead of these ads because of what regulators are saying there.
Yeah, so Meta's going to offer users in Europe ad-free access to Facebook and Instagram for a subscription fee.
Oh, Max was right.
He always is. After courts in the region began cracking down on the way social media companies treat data. I mean, watching Europe very carefully, they, in terms of privacy issues, man, front and center. They hold that very, very high of import. So kind of watching very, very carefully what's happening over there.
So what's it going to cost to scroll through that Instagram feed every single month?
That's a
drum roll?
Drum roll.
Oh, I was wondering what was going on.
Sebastian's like, no, Master,
yeah, don't do that. $9.99 in euros, so about $10.57 per month on the web.
Yeah.
Or if you pay via Apple's Android, via Apple or Android's mobile operating systems, the company is going to charge you $12.99 per month. The reason they're doing that is because of the cut that the Google Play Store and that Apple's iTunes Store take, by the way. So it's always cheaper.
So Europe's concerned about privacy issues. If you want privacy issues,
pay up.
Is that it? Or it's just that you don't get ads? They're still tracking you, aren't they?
Yeah, but they're not going to serve you personalized ads.
Okay, that's right. You won't
I don't know if they're still tracking you, actually. I don't know the answer to that. The rules are different there. The subscription services are going to be offered to anyone in the EU, Iceland, Liechtenstein, Norway, and Switzerland.
Could you say that again?
Liechtenstein. I had a high school teacher who always asked us what the capital of Liechtenstein was. Vaduz.
That's really funny.
Yeah.
A little insight into Tom?
My dad. You can call me Tom. It's fine.
I'm calling you Tom. It's Tim Stanovic. It's a Monday, man. It is a Monday. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stanovic on Bloomberg Radio.
Hi, everyone. Bloomberg Business Week continuing on this Monday live in our Bloomberg Interactive Broker studio. We are streaming on YouTube and Bloomberg Originals. Coming up this hour in just a minute, Lael Brainerd, Director of the U.S. National Economic Council. She will be live on our air.
Also, the author of It's Not You, It's Capitalism, Why It's Time to Break Up and How We Move On. It's a new book by Malaika Jabali. She's going to be joining us. She's Senior News and Politics Editor at Essence Magazine. She's making the case for socialism.
Yeah, it's not about breaking up with someone you don't like anymore. It's about breaking up with capitalism. We're getting real. And then Business Week's Culture Wars Deep Dive takes us to U.S. education and how in states where conservatives have overhauled curricula, parents on the other side of the political spectrum are taking their kids out of school and they're homeschooling them. Incredible story.
Yeah, Joel Weber's going to be here in our Interactive Brokers studio. We're going to talk all about it.
Yeah, it's just fascinating, right? Culture wars in the United States. They did do a whole section and just how it's impacting the world, including the increase in homeschooling. It's an interesting week. Some big economic news. We get the monthly jobs report that comes our way on Friday. But ahead of that, on Wednesday, we will have the latest Fed decision. Fed not expected to do anything, but the commentary about maybe what's to come in terms of more rate increases. That will certainly be front and center and really, really important. So we're going to look forward to that. In the meantime, our Balance of Power team is getting ready for a very important discussion. Joe Matthew and Anne-Marie Horder sitting down with Lael Brainerd. She is director of the U.S. National Economic Council and, of course, former vice chair of the Fed. Let's head to Anne-Marie.
We'd like to welcome our radio audiences now, as we are happy to bring in Lael Brainerd, Director of the National Economic Council. The AI executive order, Dr. Brainerd, is broad and sprawling. The EU and China, they've already surpassed the United States in developing regulation. Give us a sense of how the administration plans to implement effectively this AI executive order in a timely manner.
You know, I think this is actually the most significant effort to capture the benefits and manage the risks of AI in any country. It is, as you said, an executive order that is comprehensive in nature. It builds on the voluntary commitments of the leading producers of AI who are American, and it puts in place safeguards to make sure that artificial intelligence is safe, secure, and trustworthy so that we can take advantage of all those great benefits in terms of growth and productivity and better targeted solutions while managing the potential perils.
Well, you're clearly paving the road on this, and you just said a couple of important things, including voluntary partners. And I wonder, Director, just so we understand, can any of this be enforced without Congress taking action?
Absolutely. I think what we are asking for in this executive order is that companies make sure that they report to the government on the results of their safety tests, that they disclose that just for the most powerful models. And we do have authorities that we're bringing to bear there, as well as cybersecurity authorities. So we do have existing authorities, but of course, it will also be important for Congress to build on these efforts as we learn more and as the technology advances.
As the technology advances, Goldman Sachs says AI could raise global GDP by 7%, but at the same time could also mean that 300 million jobs go away. So how does the administration view this when it comes to the labor force participation? How can the U.S. do both, ensure both growth in AI and that Americans keep their jobs?
Yeah, that's part of the reason that the executive order has really important safeguards in it for making sure that artificial intelligence that is introduced into the workplace, that workers have voice in how it's deployed so that artificial intelligence increases their capacities, that they reap fair rewards from the deployment of artificial intelligence, that they not be subject to surveillance and discriminatory treatment. And we believe that there's a lot that the government can do to make sure that the benefits reach the workplace and it augments jobs, does not displace, but rather augments the capacity of workers in so many fields.
Director Brainerd, we've been having a big conversation today in Washington, not only about AI because of the event at the White House, but also the job market and organized labor specifically now that the United Auto Workers apparently have reached a settlement with all three of the big three. This, of course, was a picket line that President Biden was walking on himself just a couple of weeks ago. We heard from the UAW's President Shawn Fain today talking about the deal with Ford last night. I'd love for you to listen to what he said and have you respond. Here's Shawn Fain.
This contract demonstrates the incredible power that workers have when they are not afraid to use it. We went to Ford with the goal of not leaving a dime on the table, and we accomplished that. The UAW is saving the American dream, and we are doing it together.
I know, Director, that President Biden sees this as a big plus for the economy and took a bit of a victory lap today at the White House. He talked about this during your event on AI. I just wonder, though, from your perch as the director here, looking at the future of our labor market, if you see the genie kind of out of the bottle here, we're hearing a lot about organized labor around the country. The actors' strike has yet to be resolved. We understand the culinary workers in Las Vegas might be next. How concerned are you about this becoming a growing issue and more strikes popping up around the country?
Well, I think we see the UAW contract tentative agreement with GM, Ford, and Stellantis as being a very positive outcome of what can happen when the parties really work in good faith and stay at the collective bargaining table. This is really what the president means when he talks about growing the economy from the middle out and the bottom up. Union jobs have always been an important path to the middle class. And in the UAW tentative agreements, as well as in previous agreements that we saw with healthcare workers, with port workers, with rail workers, with writers, in all cases, what we are seeing is good faith negotiations leading to workers getting a fair share of the gains in these industries at a time when American companies are really doing so well.
Hard to have a functioning job market, though, particularly in an economic slowdown when thousands of workers are on the picket line. Is that going to be our reality next year?
Quite the reverse. What you see is that our labor force has grown tremendously over the course of this year. And we believe that that is in part because workers are coming back off the sidelines attracted by good pay into what is an incredibly strong economy, 4.9% growth. We learned just last week in the third quarter with payrolls continuing to increase. So we see labor force participation as being one of the real bright points of this good economy.
The real story, though, in the market, Director Brainerd, is, of course, the surge in longer-term bond yields. And I'd love you to weigh on a bit of a debate that's happening in the marketplace. Fed Chair Jay Powell said that one of the contributors to higher yields is this talk and the fact that we are seeing fiscal deficits. He's saying that's a contributor, while the Treasury Secretary says it has nothing to do with the fiscal deficit, but has to do with actually the U.S. economic growth. From your standpoint, which is it?
So, look, I think that all of these factors are contributors. When I talk to market participants, They talk about both technical factors, supply and demand changes, but they also talk about potential fundamentals. I think it's hard to say yet how much of that is contributed by, for instance, higher productivity, stronger growth. That higher productivity attributable to investments in the supply side of our economy that are associated with the CHIPS and Science Act, the Infrastructure Act, the clean energy provisions of the Inflation Reduction Act. And also we've been talking about AI and the potential that it may also be contributing. But of course, we need to be working on fiscal responsibility. We had an important agreement just in June that brings the deficit down by $1 trillion. We need to work together, Republicans and Democrats, to be fiscally responsible into the future.
With that said, we'd love to hear from you lastly, Director, on deficits, something that President Biden talked quite a bit about over the past 2 years and took quite a bit of credit for lowering the deficit. We, of course, heard quite recently that the government's deficit increased 23% in 2023 as lower income tax receipts dragged down revenue and interest rates kept rising. Is that going to be our new reality now, and how worried should investors be about that?
Well, look, the deficit has come down by $1 trillion under President Biden. He signed the Fiscal Responsibility Act to bring spending down by an additional $1 trillion over the next 10 years. But you're right that reduced revenues that were associated with the business side of the Trump tax cuts, the tax cuts for the wealthy under the previous president, those have really brought revenues down as a percent of the economy relative to where they've been historically. So we need to get that back up. Most Americans support that. They'd like to see a fair tax system, and there's plenty of opportunity just to bring those taxes back slightly more in line with historical levels.
We appreciate your spending some time with us, and say hi to the trick-or-treaters out there in the White House driveway. National Economic Council Director Lael Brainerd with us on Bloomberg TV.
Thank you.
Coming up.
All right, that, of course, is Joe Matthew. He and Anne-Marie Hordern, they are the hosts of Balance of Power right now on Bloomberg. And they, of course, were talking with Lael Brainerd, Director of the U.S. National Economic Council, former Vice Chair of the Fed, talking about some of the issues, certainly, that are top of mind for the administration when it comes to the U.S. economy.
And the trick-or-treaters.
And the trick-or-treaters. Hey.
That was cute.
Well, there's an economic component. We talked about that earlier. The cost.
Yeah, candy's expensive.
Candy's expensive.
Very expensive.
Cocoa and sugar are up a lot.
Well, those are the only ingredients in the candy that I bought yesterday because it was so expensive.
What's the candy you bought? What kind? Can I?
Yeah, I mean, I'm not so good with the like the parent companies of these candies. So who is it? Mars that owns Snickers?
I think so.
So it was like a Mars pack then.
Oh, it was a Mars. So it's all that mixture?
Yeah, and it was.
Do you have a favorite Halloween candy?
You know,
no.
I think as I've gotten older, So I think this is true.
What?
Please push back at me online, people. But like, it doesn't taste as good as when I was a kid, and I don't know if my taste has changed or if like they just use cheaper ingredients now. Seriously. So
your tastes have changed.
Maybe.
Do you ever buy the chocolate when we like walk out the door of this office?
Yeah, that's good chocolate.
It's really
like
a little
good
piece.
Chocolate here.
A little piece costs like about $9.
Yeah, that chocolate comes from Switzerland, Carol.
It does.
Not from
Angels.
wherever.
Angels carry it over.
Yeah. So, but I will.
Yeah,
what I will do tomorrow is what many parents will do, and after young child goes to bed,
you go through it.
I will take young child's candy. I will keep what's.
I'm there for you.
We'll keep what we want to keep, and then we'll throw the rest away.
Do you know, because
we're evil parents.
You're not evil. You just don't want your kid like overdosing on like sugar.
Stuff is bad, man.
Listen, when I was a kid, they used to hand out. I don't even know if they still do it. Do they still do this? The fake candy cigarettes?
Oh, they don't do that anymore.
And the first time you blew on it,
that's frowned upon these days,
like
Carol.
Powder sugar came on.
You just imagine like the old-timey candy cigarettes. Yeah, that's frowned upon in this day and age.
It was like crazy.
No, they don't do that
8-year-old,
anymore.
7-year-old.
I mean, I'll give a full report
on
Thursday when I'm back. Wednesday, I'm actually out. Got a big day of taking the kids to the dentist. The day after Halloween, which I realized in hindsight might actually be a good move.
Well done, well done.
Yeah.
I used to put candy. We used to, you'd have like a pillowcase that you would like collect, right? But it would go underneath. I used to save it because I wanted to save it, and then like come Easter,
it would still be there. I'm sure it was still fine. What do you guys give out in New Jersey?
We like to do things we like Reese's peanut butter cups.
Yeah, you guys are. It's a good house. It's a good house.
It's a pretty good house. Yeah, we do good stuff in a mixture, and kids could take a lot. Although this year, I don't think I'm going to get home till probably like after 8 o'clock. And
yeah, you guys are going to have to put a bowl out for the kids.
Take what you want.
Yeah,
Take what
honor
you want.
code. Right?
It never works. Hey, one story. Feel free to tweet at us your favorite candies. We want to talk a little bit about Elon Musk.
Yeah, this is interesting.
I have no easy segue.
You said what works, what isn't working right now is what's going on over at Tesla. We've reported a lot on that 1 year later. There was an interesting story from Fortune earlier today, and now we have a Bloomberg story about it.
Yeah.
How much it values Twitter, X, being worth less than half of what Elon Musk paid for it about a year ago.
I was going to do a mic drum roll, but I didn't want to freak out everybody in the control room. Yeah. Is worth less than half of what Elon Musk paid for it a year ago. Restricted stock units awarded to employees value the company at $19 billion or $45 a share, according to a person familiar with the matter. A year ago, Elon Musk bought Twitter for $44 billion.
Since the takeover, most of Twitter's staff was laid off or resigned. Musk renamed the company. X changed some of its content rules and has since lost more than half of its advertising revenue.
Yeah, I mean, he's got this whole other idea, right, of building, right, a super app.
Yeah.
Is kind of his thinking about it.
That's tough.
I think it's really difficult.
That's really, really tough. Americans haven't really been keen on the super app. Facebook tried to do this. They brought David Marcus in years ago at Facebook. He was a former PayPal guy, I believe. And they tried to make a super app out of Messenger. And this was years ago, Carol, like a decade ago, they broke Messenger off from the blue Facebook app. So you had to download Messenger, and they tried to make it into an app that you'd see in China, like a WeChat or a,
where super apps are very, very successful.
Huge, and it didn't catch on here.
Yeah. I think it's because China started differently. I think, right, the idea of a super app kind of came out.
Well, I think also it has to do with like leapfrogging technology and payments.
Exactly.
So it's like the payment system in China is so much more advanced than it is here in the U.S. I was in Shanghai at this point. I think it was like, more than 5 years ago. And we found ourselves, unable to pay for stuff in certain places just because we didn't have the right app. I'm like, okay, what about a credit card? What about, cash?
Which is wild. And I think about for the pandemic, for me, is finally when I went kind of all digital.
Yeah.
Like what's cash?
I left the house yesterday without my wallet, and I was like, oh, I forgot my wallet. I got to go back and get it. And then I was like, I don't actually have to go back and get it.
Yeah, so
you
it's
don't
kind
really
of interesting.
Need your wallet. Yeah.
But that's pretty dramatic. But you know what? I don't know. I would never count Elon Musk out in terms of a vision, but we will see. Whatever it's going to be, is Twitter, X, whatever you want to call it, is going to be something very different going forward. It already is.
I was just going to say, it already is.
Yeah. I miss my little blue check.
You're going to have to go dress up for Halloween.
Why?
Why not?
I know. I do love Halloween.
I'll tell you, people don't do that here at Bloomberg. You don't wear in costumes
I saw
here.
like a pirate, I thought, before when I walked in.
Okay, interesting.
It was a little odd.
Did the pirate know it's tomorrow is Halloween?
It's cabbage night.
Okay.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 5:21 on Wall Street. We do check markets all day long at Bloomberg. We begin with a headline from the Bloomberg Professional Service. Ford raised to investment grade by S&P with a stable outlook. GM reached a tentative contract agreement with the UAW, bringing an end to a 6-week-old strike that had upended American automobile production and cost the industry billions of dollars. Lael Brainerd is director of the National Economic Council. She was interviewed moments ago right here on Bloomberg Radio.
This is really what the president means when he talks about growing the economy from the middle out and the bottom up. Union jobs have always been an important path to the middle class.
And today, GM was up 0.5%, Ford down 1.9%, Stellantis dropped by 0.2%. Stocks higher, S&P 500 index up 49, up 1.2%. The Dow up 511, up 1.6%. The Nasdaq Composite Index was up 146, a gain of 1.2%. 10-year yield 4.89%, with a 2-year yielding 5.05%. Spot gold at $19.96 the ounce. West Texas Intermediate crude down 3.8%, $82.31 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Well, as conservative politicians bring the rhetoric and beliefs of the evangelical right into mainstream classrooms, reshaping American public education, liberal families are using the right's hard-won homeschooling protections to give their children a secular education in kitchens and living rooms across the country. This is from a story from the Bloomberg Business Week team.
Yeah, with more on how culture wars here in the U.S. are leading to another deep blow to public education. With us right now is Charlie Locke. She's Bloomberg Business Week freelance contributor. Joining us on Zoom from Portland, Oregon. Her story can be found on the Bloomberg terminal and at bloomberg.com/businessweek. Also here with us in the Bloomberg, in the Interactive Brokers studio, the editor of Bloomberg Business Week, Joel Weber. Joel, good to have you with us. Charlie, good to have you with us. I love this story because when you think homeschooling, there's this image of who the typical homeschooler and homeschoolee is in the U.S., and this is sort of a, puts that entire theory or image on its head.
Story's kind of changing a little bit. So we were working on this package of stories around America and culture wars, and this idea of homeschooling came up. Homeschooling has long been a thing that conservatives have fought for, mainly. What we're seeing, though, is as the politics, especially around education, have begun to change and conservative strongholds, we've seen a stronger intervention in classrooms to even change curriculum. In states that are conservative, we're seeing mostly liberal-leaning parents begin to take advantage of the homeschooling kind of push that was championed by especially evangelicals. So, Charlie, bring you in here. Tell us how the story came to you.
Yeah, so I write about kids and education a lot for a number of different outlets, including Bloomberg. And I have noticed over the past few years, just more and more families that I have talked to in the course of my everyday reporting were considering homeschooling, particularly families in red states where there is this increasingly conservative politicization of public education, whether that is in terms of what it's like for kids of color or trans or gay kids to go to public school, or in terms of curriculum and how kids are learning about American history or what they're not learning. And I've just talked to more and more parents who are kind of at their wits' end about what to do. And it made me really curious about, okay, is there this movement of, is it really changing what it means to homeschool your kids, and who's taking advantage of that? Particularly because, as you mentioned, the history of homeschooling in the past 30 or 40 years has really been built around the evangelical right, who have pushed really hard for the rights of homeschoolers, and particularly a certain type of homeschooling that really leaves it all in the hands of the parent without a lot of oversight. And so in states with big evangelical communities like Florida, which I focus on in the story, there are a lot of rights and a lot of resources for homeschoolers because it's been pushed for from this particular demographic background. But now, because of how public schools are changing and how politicians in conservative places are kind of adopting the rhetoric around parental Bill of Rights or kind of around school choice, picking up all this rhetoric that the far-right homeschooling movement has used for a long time.
Right.
It's pushing liberal families out of public schools.
Well, Charlie, can you talk a little bit about some of the most, I don't want to use the term egregious, but the anecdotes that you found or kind of what pushed these parents over the edge? You said what they're teaching or what they're not teaching when it comes to American history. I was so surprised to read in your story some of the things that did motivate these parents to move them to homeschool their kids.
Yeah, absolutely. I mean, one that was really striking to me is one mom that I talked to in Florida whose twins were in 6th grade in public school in Florida last year, and their history teacher taught them that manifest destiny referred to Native Americans who decided to move west because they wanted to try somewhere else and have more space. And the mom looked at the curriculum and looked at the slides from that day's class. She didn't really thought maybe her kids had misunderstood the lesson, and the slides had nothing about the Trail of Tears. Really presented manifest destiny as this happy choice that Native people in the Southeast made. I mean, there are other parents I talked to. One mom whose all of the books were removed from her kids' elementary school in classrooms and in the school library. And for, I think, 6 months last year, there were just no books at school and kids weren't allowed to bring them because books hadn't gone through the Florida approval system yet. And she felt like, I can't send my kid to a school that isn't allowed to have any books in it. I mean, pretty egregious moves. Yeah.
This is America today. What's interesting, too, is I feel like I wonder about the people. Tim and I were talking about this actually before we got going. Is these people, were they nervous about talking to you? And we're curious about how you found them. Was it difficult to find them?
Yeah, a lot of the families were quite nervous about talking to me, and we do grant anonymity to a number of the parents in this article. I mean, there's a real risk. I think that for a lot of these families, there's a real risk both that in their communities that they would be ostracized because of some of the choices that they're making, and also in terms of the support that they're getting. States like Florida actually give money to homeschooling families to support them and support homeschooling. And some of the moms in particular in the story talked about how they really feel this tension between wanting those finances from the state of Florida or other states to be able to support their kids' education, but also not wanting to take away money from public schools. And so they don't want to have their name in there to jeopardize the funding that's enabling their kids to learn at home. But a lot of how building a story like this takes a really long time, and I spent about 6 months building relationships with people who run communities like the CE Homeschoolers group on Facebook, and kind of building community with people who are educators of homeschoolers. And then a lot of it is word of mouth, talking to one mom who connects me to her local group, who connects me to someone else who'll talk to me.
Charlie, I'm interested especially from the mothers you talked to, and you made I thought, a very clear point in the story about how mom-centric all of this is. I am curious, does this feel just like a permanent shift for them, or are they contemplating moving because of this? What are the long-term implications that you got a sense of from your reporting?
Yeah, it's a really good question. And I think it's a very family-to-family question. I think a lot of these parents, this is not an ideal solution for them and for their kids. There's a lot that they're having to sacrifice, particularly so many moms who were working in professional workplaces before this and felt like their only option was to step back and full-time homeschool their kids. But it's not very sustainable financially for their family. It's not really what they want in terms of their careers and time. And some families are trying to figure out how to move out of state. I mean, it's hard to uproot your life and do that, right? And other families who are kind of hoping that things will get better and hope that by the time their kids are in high school, they'll be able to send their kids back to public school. But it's kind of trying to make the least bad decision for a lot of these families.
The other thing that your story explores is, as people leave public schools, that it creates this downward spiral. And since 2020, you cite 1.2 million K through 12 students have left public education in the U.S. The same people who once celebrated the institutions, once they leave like this, it means that the schools end up taking a tax hit too, right?
Yeah, it means pretty substantial and honestly pretty scary hits for public school, both because public schools are mostly funded by taxes within communities and by allocations federally based on how many students are enrolled in a public school. And so when a bunch of families pull their kids from public school, it means the schools get less money federally because they have less students enrolled there. And it also means that they get less money locally because there's less support for taxes. If you're not sending your own kids to the public school, you don't care as much about supporting those financially through your taxes. And then there are also all of these kind of softer effects too, where a lot of these parents, the parents who are able to step back from work full time and homeschool their kids, are also parents who previously were really involved at the public school in terms of being on the PTA or running fundraising drives or leading field trips. And so there's a lot of kind of the ways that public schools provide a lot of social services for families who need them. They will be less and less able to do that as more and more families who can opt out decide to opt out.
So many aspects of this story, just, the trend in parental rights, the implications for moms and working women, and what it means, Joel, for public school systems going forward.
Does not look good. But, there's what I think it shows is the commitment of families, right? And like the fact that they saw what was happening and tried to do something about it.
Incredible story. That, of course, is the editor of Business Week, Joel Weber, and Charlie Locke wrote the story, Bloomberg Business Week freelance contributor. You can find it on the Bloomberg terminal, of course, at bloomberg.com/businessweek.
Let's get a check of world and national news. Nancy Lyons in the DC newsroom. Hey, Nance.
Thanks, Tim. President Biden says he has spoken with the president of the United Auto Workers about the end of the strike against the big three automakers. GM today became the last of them to strike a tentative deal. Biden says it's good economic news.
These agreements ensure the iconic big three can still lead the world in quality and innovation.
President Biden spoke during an event in which he outlined new steps his administration is making to better regulate artificial intelligence. He signed an executive order that will establish new standards for AI safety and security. Israeli forces continue their ground offensive in Gaza following the unprecedented attack by Hamas earlier this month. Prime Minister Benjamin Netanyahu says his new phase of the conflict represents a critical moment.
This is a turning point for leaders and nations. It is time for all of us to decide if we are willing to fight for a future of hope and promise, or surrender to tyranny and terror. Now rest assured, Israel will fight.
Humanitarian aid is flowing into Gaza with 150 trucks moving in yesterday, more arriving today. The State Department's Matt Miller says they're also pressing Israel to restore access to water and communications in the region.
Water is a fundamental human right, and its availability is crucial for the well-being of Gaza's residents. Communications networks needed to be restored, and we are pleased that they took steps to do that.
Miller says officials are also working to try and get Americans out of Gaza. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 5:40 on Wall Street. We do check markets all day long at Bloomberg. A Monday rally with the Dow, the S&P, and NASDAQ all up by 1.2% or more. Stocks rose, treasuries fell, oil sank 3.8% as Israel's ground incursion into Gaza appeared less extensive than investors had feared. S&P today advanced 49 points. That was a gain of 1.2%. Dow Jones Industrial Average up 511 points, up 1.6%. The NASDAQ Composite Index was up 1.2%. Russell 2000 Index of small cap shares up today by 0.6%. 10-year yield 4.89% with a 2-year that's yielding 5.05%. Gold at $19.96 the ounce, while West Texas Intermediate crude, as I mentioned, down 3.8%. Yes, crude dropped today, but look for a range-bound market, according to Amrita Sen, Director of Research and founder of Energy Aspects.
There are no direct risks to supplies, and that's probably what's made it very hard for oil to rally. Yes, the region, again, home to the largest reserves and production of oil, but if there are no direct threats, how do you price this in? This is precisely why we've seen a lot more activity in the options market than in flat price. People can't short this market, but the macro picture has deteriorated.
And again, you can hear more of that conversation with Amrita Sen on the Surveillance podcast. You can download it wherever you get your podcasts. Apple set to capitalize on a computer market resurgence when the company unveils 2 new Macs and processors today. The company is holding an online event at 5 p.m. California time, dubbed Scary Fast, where it's poised to announce a new iMac and updates to its high-end MacBook Pro. Again, recapping, stocks higher today, S&P up 49, up 1.2%. Apple, by the way, up 1.2% as well. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. Really do appreciate it. Well, as I was preparing for our next guest, Carol, I found some fascinating data from the Pew Research Center. Get this. Only 40% of Americans who are ages 18 to 29 view capitalism positively. This is from a 2022 Pew survey. It was done in August of 2022. So that 40% is a low when it comes to age groups, and it's more than 30 percentage points lower than those who are 65 and older.
It
so
doesn't
those who
surprise
are 65
me.
And older,
It doesn't surprise
do you have a
me.
favorable view of
Don't you feel like you
capitalism?
have conversations with younger individuals and they're like, capitalism, not good?
Yeah, I do. And sometimes they outgrow it and sometimes they don't.
Well, you laid out some statistics, right? And the demographic differences don't stop there. There are differences among white, black, Hispanic, and Asian Americans with respect to how they feel about capitalism. So I'm guessing our next guest is going to have some thoughts about this.
Malaika Jabali is the author of a new book. It's not you, it's capitalism, why it's time to break up and how we move on. She's also senior news and politics editor at Essence Magazine. She joins us on Zoom from Atlanta. Malaika, how are you?
Hi, I'm well. How are you?
We're doing well, thanks. Congratulations on the new book.
Thank you.
This is not just, we say book, but it's like not just like any other book. I mean, This has got some great illustrations in it. It's got some really cool charts. It's got some Drake in there as well. It's awesome.
You keep that. Great.
It's very, very cool.
It's digestible, too.
It is
it's
totally
just the way
digestible.
You kind of lay it out.
But I want to know about capitalism. What drew you to questioning capitalism?
Well, you guys kind of hinted at it. It was a lot of things. I had a foundation in these organizations and movements in the South, of all places, where Black people were questioning it. If you look at where our economy really was founded upon in the South and really the entire country, it was based on Black labor. It was based on free Black labor. And that is how we have capitalism today. And so you had these groups in the South who were looking at our role in this entire system, and we just haven't seen any system. We haven't seen it thrive without that kind of exploitation. Even if you look, beyond the slave trade, if you look beyond plantation slavery. So that was sort of underpinning, I think, just my being open to be critical of the system. But I'm a millennial. Like, I lived in New York City. I was studying securities regulation of all things at Columbia Law School. I was studying primarily at the School of Social Work at Columbia. But literally the class was about looking at the financial crisis, where we got diverted from the core syllabus because Wall Street was falling apart. So we were reading newspaper article after newspaper article. It really became more like a doom scrolling, newspaper session, but it wasn't scrolling at the time. We're flipping through the pages about all these financial industries that were just going underwater. And even then, it was based on targeting, low-income families. So I think I started to make the connections between what we were experiencing on like a day-to-day and the regulations and the policy and the legal infrastructure behind it.
So all capitalism, in your view, bad?
Fundamentally, it's bad. And I think we also have to unpack what we mean by capitalism. There are small business owners. We would consider that, the petty bourgeoisie, just owning a small business make you bad. I don't think inherently. I think what the critique is really about is that you have a system that incentivizes exploiting labor as much as possible. It incentivizes getting as much profit as you can off of people as possible. So not every person who owns a business is going to do that, but the system does incentivize that. So if you are operating that way, it's logical to do those things because that's how you survive in a capitalist economy.
Malika, what would you say to someone who said, okay, well, capitalism isn't perfect, but it's the best system that's out there? What would you say to that?
I think we can do better.
What's better?
This is America where, we believe in exceptionalism. I think we can do better. Why not get excellence? Why are we settling for just okay? Again, the book is, or if you could glean from the title, it's looking at our toxic relationships. And we often think, this is the best that I can do. I haven't had better in the past. That's depressing. If we think that a system where we have not seen wage growth keep up with production in 50 years is the best we can do, I don't believe that. We really believe this is a system where you have so much poverty and homelessness, where healthcare outcomes are among the worst, if not the worst in many metrics compared to other industrial countries. I think we can get much better than that.
Malika, a listener saying, are you going to share your book profits?
Well, I don't. I think first people should understand how book deals work. I don't have profits. I'm getting a loan in order to make this book be produced. And if I were to get profits, I would love to share them. There is an organization I work with called Operation Power. I would love to give once I get profits, if that happens. So y'all got to buy the book in order for me to get profits to share. It's a social justice organization that I've worked with, and I'd like to give them some profits. There's all kinds of organizations that I would love to give money to if that's how book deals worked.
Is there a country in the world that is doing this well that you would model a system after?
Yeah, I would say actually the United States has a lot of vestiges of that before socialism and socialists were alienated and surveilled and killed in many ways. But we have what's called the Wisconsin School of Economics coming out of UW-Madison. There was an economist who was a socialist named John Commons who brought us the modern day, or his school of thought brought us the modern day Social Security that we have. Through that work, we have workers' compensation. Through that work, we were able to have, 5-day work weeks and workers insurance, workplace insurance, unemployment insurance. So this school of thought really countered what was happening with the Chicago School of Economics, where it was very conservative. And so in UW-Madison, they really wanted to center labor. So a lot of these economists ended up working under FDR, doing his New Deal regulations and administration and working on his laws to create the laws that we have right now. So I think we just need to keep up the work that we had started on that we abandoned.
We've unfortunately run out of time. Malika, I hope you come back because I'd love to continue this conversation because I think it's a provocative one, an interesting one, considering I think about Peter Atwater and the K-shaped recovery, and we talk about the gaps and the inequities where not everybody enjoys in kind of the fruits, if you will, whether it's the public markets or are sharing in the profits of companies. But I feel like we've got to go a little bit more deeper. So come back soon. Malika Jabali, she is the author of a new book, It's Not You, It's Capitalism, Why It's Time to Break Up and How to Move On. She's also senior news and politics editor at Essence Magazine, joining us on Zoom from Atlanta. You are listening and watching Bloomberg Business Week. Carol Massar, Tim Stanovic, and this is Bloomberg Radio.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Ford has received its second credit upgrade, marking the automaker's return to investment-grade status after its downgrade junk in 2020. SoFi Technologies increased its revenue forecast for 2023 and said deposits more than tripled from a year earlier. SoFi up today by 1%. One of the big market events this week will be Apple earnings on Thursday. Sarah Kunst is managing director at Clio Capital.
Even though they've fallen off those highs, you know, the sort of AI rally that we saw earlier this year certainly pushed a lot of them back up. You know, individual names like Meta have had just a tremendous year overall, even though they're not necessarily doing the best right now. So, you know, tech stocks might still be pretty frothy, but I certainly don't think that they're nearly as bullish as they were a year and a half ago.
And you can hear more of the conversation on the Talks podcast. You can download it wherever you get your podcasts. She mentioned Meta. It will be offering users in Europe ad-free access to Facebook and Instagram for a subscription fee after courts in the region began cracking down on the way social media companies treat data. McDonald's sales and profits beat expectations in the third quarter thanks to higher prices. The burger chain said comparable sales, which track restaurants open for at least 13 months, rose 8.8% in the period, surpassing the 7.8% average estimate of analysts polled by Bloomberg. And those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody, it's time to go to Tokyo Disneyland because coming up at the top of the hour is Daybreak Asia.
What does that mean?
Did you not read the story?
Well, you need to explain it.
Yeah.
Jump
Griffin.
right into it.
Ken Griffin. All right, first of all, Daybreak Asia is coming up at the top of the hour. All right, let's play by the rules. Doug Krisner and Brian Curtis will be here in just a few minutes. Doug is in studio. So Ken Griffin of Citadel, right? There was an anniversary, right, that they couldn't do during the pandemic, celebrate, right?
Correct.
And so what they ended up doing is just recently they sent all of these Citadel employees in Tokyo and their families.
How many of them were there?
Is this like the Bloomberg quiz?
Well, I think there were 1,200 in total, so that's employees and families, 3 days
And they
at
went to
Tokyo Disneyland. What are you doing?
You're not allowed to do this.
That was right in my ear, Carol.
You do that.
That's the drum beat, but it's on the mic.
Okay.
All right, I'm a little wacky because I'm a little tired today. Yeah, they all went to Tokyo Disneyland.
Yeah.
Isn't that pretty cool?
That's pretty cool.
I think it's nice that Mr. Griffin could do that. Very generous. Back in December of last year, I think he did the same thing with employees in Europe, right?
He absolutely did.
Right.
Yeah, or U.S. Didn't he do it for U.S. employees?
I think
too?
they were included on that.
Yeah, exactly.
Have you
All
been
right.
to Tokyo Disneyland? I've never been there.
No. Have you ever been to Disneyland?
I have, yeah.
Disney World?
Both, yes.
Have you ever been?
I took my daughter to Disneyland many years ago,
California?
and
You
yes,
live close
California.
to there,
Yeah, Anaheim, very near LA.
Disney World,
So-
though. That's the biggie. Orlando.
I'm just looking at this.
All right, do you
Did you see there was another story on how many people
What?
have been traveling there and spending like thousands of dollars? I mean,
Well, that's how much it costs to go there now.
thousands of dollars for a
expensive.
family, of 5 people. I mean, it's heavy money.
You know, I was talking to CEO in the leisure world, hospitality world, and he says even like in a recession, like people want to go places.
Oh.
And so they are going to be last to kind of put off their vacations.
We also talked to Chrissy Taylor, who's the president and CEO of Enterprise earlier today, Doug.
The car rental company?
Car rental, yeah. I mean, along with
Enterprise
Avis
Mobility.
Budget and Hertz, they pretty much control a large portion here
It's
in
a
the
privately
US.
held company, though.
Privately
right?
held.
Right,
She's
right.
third generation.
Yep,
Yeah.
yep.
Her grandfather started it in 1957.
Isn't that wild?
Very unique culture, too, the way
Yeah.
that they kind of bring employees up through the ranks, the training
That's
program.
where she started.
as an intern.
Yeah.
At the
yeah,
counter.
Yeah.
Yeah.
So she told us she's very hopeful about the U.S. at least avoiding a recession.
Yeah.
Which I thought
Soft
was really
landing kind of
interesting.
thing, huh?
Yeah, she sees the numbers in real time. And she also has, because they do like fleet management for a lot of trucks and trucking companies.